Good afternoon. Good afternoon. If everybody could, we're going to have to keep the doors shut because it gets hard to hear all the noise. Today is March 12th. Welcome to the bill hearings for the Ways and Means Committee. We have one bill today, 1554. I believe we have 124 witnesses. We want to hear from everyone. So everyone will have a minute and a half, so please try to stick to that. I'm sure there will be lots of questions for folks, and we need to keep the doors shut. I don't mind if people stand, but it does get hard to hear when the doors are open. So with that, I will welcome our majority leader, my friend, Delegate Moon, to kick it off. Thank you.
Thank you, Madam Chair, Ways and Means colleagues. I'm here for...
And I should... I should also say that, and I'm sure Delegate Moon will introduce her, but we have someone from the Comptroller's Office who's here for questions.
That's right, and they're here information only, but they are it's Deborah Gorman from the Comptroller's Office. They're here to answer technical implementation questions for what this would look like if this committee so chooses to move this bill forward. So, colleagues, House Bill 1554 is a business-to-business services tax bill. I do not bring this to you lightly. Actually, I had planned on introducing no tax bill this year whatsoever. When I dropped the services tax bill in here last year, it was a broad bill. It was a $3 billion bill, and I said at the time that it was a conversation starter in order to get us going on the topic of addressing these deficits and out-year deficits. Once that conversation began in earnest this year, I was quite satisfied. It looked like people were bringing real cuts to the table and real revenue options, and a debate was beginning. But as you know, the events in recent weeks with the administration are causing a need to reevaluate almost every aspect of the General Assembly's work this session. And I truly mean that. You know, I sat in the leadership meetings and I said, whatever it was we were working on the Health Committee, on the budget, on education, was going to be easily eclipsed by the actions taking place just next door in Washington. And so we better pay very close attention. And in the weeks that have unfolded, we've seen the unemployment insurance rolls doubling basically on a weekly basis here. And the hits not just to our public sector employees, but the private sector keep coming. I talked about $1 million in layoffs because of the loss of research grants, private pharmaceutical companies telling the SEC they're no longer bringing products to market due to FDA and NIH cuts, and 1,250 USAID contractors on the private side being laid off in the first weeks of the administration. So of course, the Board of Revenue Estimates is now suggesting this is at a minimum a $350 million revenue write-down with 30,000 direct employment losses just on the public side. And again, that's before you start factoring in the grant losses and other anticipated losses of direct and indirect federal support. So I don't need to harp too much on that context. You all know it. And it's been keeping me up at night, frankly, the last week as we close in on needing to make a decision about what to do. So I am not here to push this particular plan on you, but it did seem prudent to add options to the table for discussion. There's certainly a very big discussion going on about additional cuts. The governor came with $2 billion. I believe the legislators are looking at hundreds of millions in additional cuts. In other words, pretty close to the $3 billion deficit we started with. So you're getting that already. But again, it seems to me, with the floor falling out on our fiscal ship, that we need more options. I don't know if this will add to the revenue options that are already there, if it'll displace some of the ones that were suggested, or some mix. But again, we need more options, and we've certainly heard feedback from folks who don't like various aspects of some of the options currently on the table. You're the committee that's heard them. We voted for some of them, iGaming, combined reporting. The governor's proposing itemized deductions and income tax alterations. All of these are in the mix next to this option. So a little bit of historical context, if you so choose this option, as to why one might take this approach. Well, it's been much understood in economic literature that for decades, the state economy and national economies were goods-based. And so Maryland's economic activity was 2-to-1 goods versus services. And in the decades that have followed, that's flipped. And so now we are 2-to-1 services to goods. But that does not change the fundamentals of the social contract that gives rise to government and taxes. The need for infrastructure, our public school mandates, which are both federal and actually in the state constitution, those are the things we needed. And nobody likes taxes. Nobody likes doing this of any of the options on the table. But we are left with the reality that people like their services when suddenly they are the ones in need. And you look at the various populations just in the last, I don't know, 5 or 6 years. And I want to put this context back for how we came to some of the decisions we did and what the demands probably from many of the people in this room and some of the ones behind us were in the last few years. Coming out of COVID, we had enormous demands on government services of every stripe. We had worker shortages, rebuilding our economy. Everyone demanded it. We needed bus drivers. We needed people working in the restaurants. No one was operating at full steam in the government or in the private sector, and it was holding our revenues back. So we took action on quite a number of things. And first and foremost, I would flag Medicaid. The key bridge hits that came, again reminding us of the importance of infrastructure investments and the port, the nearby airport, and the highways and waterways that service our very robust freight port operations. And we're racing to get those back on track. And we were very concerned about the loss, potentially, of $1 billion of government infrastructure spending. And now here we are again with, as I noted, a very real prospect of our unemployment rolls surging in a way we haven't seen, again, since COVID. But this time, without the rescue of a sympathetic federal government. In fact, quite the opposite. They are the ones inflicting this pain. So that's a little bit of historical context, both policy-wise here and some of the drastic measures we are already taking. And I don't want to harp on, it'll be the place of the Appropriations Committee probably to talk about what the next 100 million, 200 million, 500 million in cuts looks like. But you're bumping up against disability, foster services, Medicaid, veterans, and senior services. And it'll be hard to avoid that. So again, this is an option. You will also, those who were in this committee last time around will note, as I have noted, that last year's bill was a very broad bill to start the conversation and start to get a scoring and understanding of what the implications of a policy like this would be. And believe it or not, some of that feedback is reflected in what you see here. Delegate Long talking about whether it was appropriate to tax funerary and mortuary services and put that burden on people at the end of life. That came out. The current concerns about housing cost led to the builders being removed from the bill. And frankly, we wanted to try and remove as many elements touching housing cost as possible. So title attorneys and things like that were flagged as a concern. Same for some of the energy sector services. Those came out. In response to the frame of the last election, we made a real effort to try and focus as much of this on professional services as possible and trim out blue-collar workers. Now, none of this has been done perfectly, and again, this legislation was crafted in tandem with our Senate partners who had their own opinions on how to do things. And so I'll ask you again, as we talk through the bill, tell us what you think works, doesn't work, things we might not have thought about. We now have a fiscal note that also indicates how much revenue would be generated from each of these items, and we can take a look at it and say, is it worth it? So I won't delve too much heavier on that sort of broad context on how this actually would work and what you see here. And again, I will turn soon to the Comptroller's Office for additional detail on implementation. It's a 2.5% services tax that would apply to business transactions. We would have to further clarify by definition, potentially, what we want to include or not include in the definition of business entity. The numbers you see in this fiscal note do not include sole proprietors, for example. Okay, so there are some variables in what you see here. Because the framework of this is within the orbit of a sales tax, you should think of it like a sales tax in how it would be implemented. And this is also why the Comptroller's Office is able to implement a bill like this rather quickly, is if it's from the frame of a sales tax. And so that would mean you're trying to charge the 2.5% on the person who is purchasing the service, okay? So if you have a out-of-state company, just like if they're selling you and mailing you a good, they have to charge, a California company is going to charge a Maryland sales tax on that product coming to you, and likewise, a California vendor of services would be made to, under the Wayfair Nexus decision, to apply that tax likewise. So, and I know that's just, you know, and I'm sure that's going to raise some questions. The other thing I would note, and I did read through quite a bit of the testimony, tried to absorb some of the concerns from folks, and I acknowledge a lot of these are legitimate questions, and if you look at the various states that have various taxing models, they're all different. But I will say this, many states tax services, including professional services and business services. Some of them, by default, tax all services unless they said it's not taxed. And some of them tax selective services, and you have everything in between. Delaware taxes services on gross receipts. West Virginia taxes all services unless they're exempt. Virginia only taxes services on tangible property, and Pennsylvania taxes services on a range of types of service transactions. And I'm happy to provide additional charts if folks are interested in looking at the sort of state-to-state comparison of how these operate. And I would also recommend that if folks are curious about what the breakdown is of some of these items, you can easily Google the NAICS codes and it'll pull up additional items. But again, happy to have a conversation about any of this and flag any initial questions or concerns folks have. And with that, I will turn it over to the Comptroller's Office.
Deborah Gorman, I am the Director of the Legal Division at the Comptroller's Office. Just wanted to confirm that the bill as is presented, we can implement by the implementation date, the effective date in the bill, and I am here to answer any questions about how we would implement.
Thank you. We will start with Delegate Buckle.
Sure. The first question I might have would be for our colleague from the Comptroller's Office. Delegate Moon just indicated that he believes the bill as written would not apply to sole proprietors. I skimmed through the bill. I want to make sure I'm not missing anything. The only thing I saw that would define who it applies to is the section that says the following services if both the provider of the service and the buyer are business entities. But there's no definition of business entity anywhere in the bill. What's the comptroller's position as to how that would apply? Sole proprietorships can frequently be organized, obviously, as a business entity, at least in my legal parlance. What's the position as to why the conclusion is it wouldn't apply to those types of operations, if you know?
I believe the comment may have been that the fiscal note did not include sole proprietors.
Oh, so the bill would apply to sole proprietors, but we just don't think DLS either did or was able to analyze it for all of the thousands of sole proprietors in the state?
I can't speak to the analysis as far as if the bill is as stands, if there is no further definition or clarification of business entity, which certainly you all may undertake that, we would look to the IRS for some guidance. They don't have a description of a business entity other than it's someone engaging in a business. What they do describe are activities that qualify as business. So if your primary purpose for engaging in the activity is for income or profit, and if you are actively engaged with continuity and regularity in the activity, the IRS considers that as business
so I
activity.
think it would apply to anybody who's doing anything to try to make money would have to pay the tax. But I appreciate the clarification of that question. I just had a couple of questions for my friend. I'm glad that you're here today. I know you're a person of good faith, that you don't do things in any malicious way, shape, or form. I certainly hope everyone understands that. But in sort of your preamble to why you brought the bill, you talked about, you brought this obviously late after the normal filing deadlines in response to actions in Washington, D.C. But you would agree with me that the state of Maryland had a $3 billion roughly deficit just for this year, well before anything that's happened in Washington, D.C. the last 60 days, right?
That is correct. It's why I brought the bill last year and said I really hope we can get on and start this deficit conversation now. But I also noted from the top that we are 2.5 billion in cuts and counting already. So again, I concede the point. I'm among those who had wished we had raised blueprint funding mechanisms in earlier. But again, that's paid for now through the end of the term. And we are already billions into closing the immediate deficit. But that doesn't change the rest of it. We're clearly being told by Moody's and the Board of Revenue Estimates that we have to prepare for.
So you would agree with me then when you say the blueprint fund's already paid for, it's paid for because we divert 12% of our sales taxes plus a wide variety of other taxes into the special envelope we call the blueprint fund. That's a legislative policy decision that we could undo and say, hey, we're not going to put 12% of our sales taxes into the blueprint fund.
I'm
We're going to use
just
it for
answering the balance sheet math that you've
this
asked about.
This bill starts putting $110 million a year into the blueprint fund next year, but you said it's already paid for. So could we take the blueprint fund money if we pass this bill for FY 2026 and FY 2027 and take it out of the blueprint? Because you said we already paid for it, so we don't need to pay for it twice.
It's in the immediate, for this term, it is paid for. If you want to suggest diverting funds, you're certainly willing to, offer an amendment.
And then my other two questions to you is, it relates back to sort of your rationale for the bill in the future. Maryland obviously is very susceptible to federal government employment fluctuations and federal government funding fluctuations because we built our house on the sands of the federal government. But to an extent, Virginia has too, I think you would agree. Virginia has fairly similar amounts of federal investment and federal population as federal employees as part of the population. To your knowledge, the Virginia General Assembly session, I think, is going on in Richmond as we speak. To your knowledge, is Virginia proposing raising taxes of this nature, or isn't it a fact that Virginia has a multi-billion-dollar budget surplus in their system with a very similar economy to ours?
They do. I do believe many of their leaders are currently in the news talking about a regional recession being triggered in their state. So just put a pin on that.
Okay, but then my final question to you, just, we'll have plenty of time today to go through the logistics of the bill and all of the hundreds, thousands of businesses it applies to and the effects it may have. Governor Moore proposed in his bill that we heard here, the BRFA essentially, roughly $1 to $1.3 billion a year, not just one time, but a year in new tax increases on people from a broad spectrum across Maryland, from delivery fees to $1 million, $500,000 earner taxes, to eliminating itemized deductions, to sports gambling, whole menu that added up to well over $1 billion. Is your position that you think these taxes should go through in addition to those taxes, or you think these taxes are part of an option to eliminate some of his proposals?
I can't answer that question. If you want to know the honest truth, I am not actually on the team doing any of the budget negotiations. So I mean it in truth when I say I literally am looking at what's going on in the world and thinking maybe we need some new options. And again, not just as an option to add revenue, but many colleagues of mine have questions about some of the revenue options that we've previously voted on and ones that the governor has proposed. I don't want to comment on my own personal opinion on all of the
I like your personal
aforementioned
opinion
items, but people have had mixed feelings about it. So again, I can't predict whether this displaces some of the existing revenue options on the table. But that's, to my point here, you have to look at all of the decisions we're making on budget and tax as a bucket, a bunch right now that move together. And I just say, reserve judgment on specific elements until you look at them together. Okay. Because if it's this versus that, you might think differently.
And I appreciate that. It's just we're getting late in the year. Things are a little opaque. We need to make some of these decisions. We need to have that debate in a real way as opposed to a theoretical way. I would just say this in closing to you. If we take Governor Moore's $1.3 billion in tax raises, and we take your $1 billion roughly in tax raises, and we take something like the sugar tax that was here the other day from another person, well-intentioned, of good faith, $500 million a year in taxes, we're talking about $2.8 billion a year in more taxes that comes out of Maryland's economy and our private sector. And I think we'd be devastated. I think the state would absolutely collapse from a population and an economic output standpoint if we did these things. We need to get serious about what we're going to do rather than just always the theory of we might do more, because that scares the crap out of people all over the state, from Oakland to Ocean City. So I appreciate
I just want to be clear. I do believe we need to do more cuts.
Okay. I thank you for your information. I appreciate it as always.
Okay, Delegate Hornberger.
Thank you, Madam Chair, and thank you for bringing the bill. I know this is a tough subject. I'm kind of thinking, because I live in Cecil County, as you know, I'm right on the border of Delaware. Love to, if I'm spending over $300 at the store, I'm buying it in Delaware. It's just what, a practice I've had over the years. I'm looking at the gotchas, like how do we implement this tax, right? So if I buy a car in Delaware and I bring it over to Maryland, the gotcha is when I go to register it, I got to pay that tax, right? They got me. Damn, I wish I could have just bought it in Delaware and not paid the tax. All of these NICS codes that you have listed here, with the exemption of maybe landscaping, because that's on my property here in Maryland, I think I could escape by going and doing them in Delaware, right? Maybe valet parking the car too. I can only park my car here.
In Delaware, just to be clear, they have a gross receipts tax on their businesses providing services.
Right, but I'm saying to me, the consumer.
Well, it's right. Built into the price, sure. In that scenario.
Yeah, I've got Pennsylvania too. I'm yeah. Right there in the corner. Good spot to be. So my question is, these particular codes can kind of be done anywhere. Even though I'm a Maryland resident, I can have my accounting services done in Pennsylvania or Maryland, and or in Delaware or Pennsylvania. There's no gotcha, right?
So this goes to the Wayfair question, right? I mean, we had the same problem when it became legal to tax online goods sales from out of state.
Yep.
There's rules on, you have to have a nexus. In Maryland, the nexus is 200 sales transactions or $100,000 and a penny gross. I believe. And so again, if we're using the sales tax as the implementation model for doing the services, it would be the same. Those businesses that have that nexus who are out of state would also be under an obligation.
To remit tax to Maryland.
Correct. That is correct. Just like, Target from out of state would be required to right now selling products to Marylanders.
And how does that get enforced, being that it's out of state?
So again, I'll let the comptroller's office weigh in with detail, but for the larger businesses, you can imagine the larger the business, the more attuned they're going to be to this, especially if part of their servicing here is outsourced to companies that specialize in this. The comptroller's office also proactively goes out and tries to alert folks about the need to register, and then there's auditing. Now, I will concede there's a question at the tiniest level of business, but I flagged from the top that I believe, one of the questions this committee and the assembly will have to deal with is it'll be helpful to put some clarity on the term business entity.
Sure.
And the implementation challenges are probably greater for the smaller entities to begin with than they are for those larger entities. But otherwise, it ought to otherwise hold the Maryland business harmless with respect to the California business and, just like a sales tax being charged to someone mailing comic books, from another state. But perhaps the comptroller's office can add clarity to that.
Sure.
Thank you. I think it's a fair summary to say that our compliance group does both audits and outreach, informational, to try and get the word out to businesses how to be compliant so that it isn't a gotcha in an audit type situation. Many of the existing sellers that are exceeding the Wayfair thresholds are aware of their obligation if they are out of state providing goods or services into Maryland, that they have to collect sales tax. I think we've all seen a bump when we buy things online, folks generally collecting sales tax now. That we didn't used to see years ago. There will be an education effort that needs to take place if new services are added so that folks who were not previously collecting the sales tax can become aware of their obligations.
And also, just to clarify here, one wonky bit of this that we've stumbled upon, some of these businesses will already be in the system. And one example I stumbled upon is like the print shop I use for my campaign mail has been charging me 6% on the total of the job, the inkjetting, the sorting, the cost of the paper, the labor to deliver it. And I've been paying 6% on that. But in this regime, they could choose to split out the invoicing and apply 2.5 on the service aspect and 6 on the paper. I believe that's correct, right? Yes.
Correct.
Okay, so if, as a follow-on, if a business decided that it wanted to relocate to try to escape this tax liability, as long as there's a nexus of customers, I guess they have to confirm.
If they're trying to keep their Maryland customers, they're not escaping their tax liability.
Even if they move. Okay, thank you.
Delegate Long.
Thank you, Madam Chair. Just recently heard the governor come in and say how he wants to promote business here in the state of Maryland, not depend on the federal government so much. He's actually outlaid some things that he'd like to do. I just have to ask this question. When you think this would be detrimental to what he's trying to do because we're only affecting businesses and not trying to bring new businesses in, this would be detrimental to what the governor's proposing. What's your thoughts on that?
I think we have a lot of tough choices and we have to balance different interests. I totally concede the point. Again, when I started the session, it was not my intention to even concept a bill like this, but again, I heard feedback on some of the existing proposals, both revenues, cuts, additional taxes, and it sure seemed like people wanted additional options on the table. So here you have one. Again, I can't comment on it because the governor had multiple aspects impacting businesses in his proposal. Some were to their favor, some not to their favor. So again, I just, if this goes in with a package, you have to look at the whole thing as a total and see whether, if this could displace a few of the elements in there that were unfavorable to businesses from some of the other proposals. So I just can't predict.
Right. This tax, do you think, from what I've read, it's going to be passed through to the customer?
Again, it's hard to say that with a yes or no because different businesses will choose to do it differently depending on what they are. But, you know, you look at how Delaware does it, they put it as, you know, as Delegate Hornberger noted, they put it on the gross receipts. Well, the business is paying that. There are different ways to structure this so that the consumer doesn't have it. But when you look at the alternatives, some of the entities who don't like, the business entities who don't like this are proposing, it's income tax hikes and sales tax hikes. So again, we have to look at this in the context of all of the options. It's possible we could just do all cuts. You know, we can sit down and look at what that looks like. But I think some people will have misgivings about what that option looks like. So you'll be left having to pick and choose among some of these other options.
Right. Well, one last thing, given some of the margins, profit margins, some of these small businesses, it's going to be devastating. And I know we need to do something, but all right, I'll just leave it at that. Thank you.
Amendments, suggest amendments.
Delegate Miller.
Thank you, Madam Chair, and thank you for being here. I have a couple questions along what Delegate Long was saying, because Governor Moore does have an economic growth agenda. And one of the issues that I was looking at when we're talking about it and looking at it in totality, I just want to clarify one of the things you said. So if a business in Maryland or a person in Maryland now contracts with someone in Virginia for any of the listed out services, right? So if they go there for their accounting, if they go there for their repairs, if they go there for consulting, whatever it is, then that business in Virginia would apply the 2.5 Maryland sales tax to, so even with living in Frederick, I am very close to not only Pennsylvania, but Virginia and West Virginia. And so if you go to any of those outside, they still have to pay and submit the Maryland tax. So, okay. I just wanted to clarify that for people first. So one of the other aspects that I wanted to specifically ask the comptroller is about the fiscal note. The comptroller's office, thank you for being here. In the fiscal note, it says that you will need to hire 3 auditors, compliance auditors, to administer the new tax. And then also another $250,000 for computer programming modifications, tax reporting, and the collecting system. Is that right?
That's correct.
Okay. And so when you did the small business effect impact on the fiscal note, or do you know if in the fiscal note for the small business effect, was there any looking at what kind of expenses small businesses would have to do to implement the reporting, especially if it's going to be complicated where you're contracting with different states for different services, especially as any kind of business, especially as a small, large, whatever, they don't have a lot of staff to do that, and their computer equipment isn't going to be set up. And I heard from, but go ahead and answer the question, then I'll go on. Was that in the fiscal note concerning the small business impact at all?
I don't know the answer to that.
Okay, thank you. Because then the other question is looking at things in totality. It's also about tax competitiveness when we're looking at regions. And you mentioned Delaware does have some services, but as a total state tax competitive index for 2025, their ranking is 18th. Pennsylvania is 34th. And Virginia is 28th on the competitiveness as states. And Maryland is 46. So if we're implementing this, do you think we'll go to 47th, 48th? Because from 2020, we were 41st, then we were 43rd in 21, and then now we've been 46 holding steady. Do you think this would set us to, and then how does that how do you work that out with the economic growth that we're trying to drive when someone sees that?
So again, there were some items in the governor's package that would have gone in the other direction. And I just don't know how this is going to balance out, which elements are in, which are out. I don't even know if this one's moving, but does it move in whole or in part, right? I mean,
Right.
I'm sorry, I can't gauge that. But I will just say, I share your concern. I swear to you, I've been up all night having difficult sleep as we zero in on this, trying to figure out what's the right move at the moment. And I think all of these concerns are entirely legitimate. I wish we were not here, but this is what we're here for, is to make these tough decisions, catch all of this feedback, balance all of it. And yes, I think we do want to stick to the governor's plan to the maximum extent possible to try and kickstart the private sector economy. I get that, but again, look at what's going on, the context of the challenges coming at us. I want to say we don't have to do any of this. We're going to be fine. But they're kicking the legs out from all of our private employers at the moment. The consulting companies, the pharmaceutical companies, aerospace, defense, all of them are getting the legs kicked out. Our unemployment rolls that we have to pay for are going to be flooded with these private sector employees. We are already shouldering on our Medicaid rolls many workers. We're paying for that so that they can participate in the workforce. The same thing was true of the child care scholarships. And again, this is why I don't mean to just, throw these examples out as excuses, but it wasn't very long ago that people were demanding that we took care of the worker shortage problem. And at the time, as you all know, that did involve needing to pay people more to get them to come back to work. And we were and are still competing with states for the workers too.
Right, and I appreciate you saying that, and I appreciate your sentiment on the bills keeping you up at night. The bills often keep me up at night a lot, especially as we're going into this next week with budget. So to your point, like a sales tax on staffing services has been proven to reduce employment and economic activity. There have been studies, and this information came from, what I did as any good legislator is I reached out as people were, I'm sure your inbox was flooded too with emails about this, right? And so I asked for my constituents to give me some comments. I had a form for them to fill out so that I could collect their comments in other ways other than just that. And that was from one of my constituents, that this will significantly actually reduce employment staffing. It could have a huge adverse effect on businesses and them having to lay off people, not pay people as much. So is there a concern then that will flood even more the unemployment because of this? And I'll give you a second. I just want to read a couple of their comments. It says, most of our clients would seek alternative consultants in other states. We would lose significant accounts and not be able to survive this tax plan. The extra taxes will totally undermine my company. And at this point, they would have to see their business shut down or move out of state. And then another one was either move out of state or close my practices. This was asking about what the impact of this tax would be for my constituents, and I'm sure constituents across the state. I will not pay or charge my clients this tax. We'll have to lower our associates' pay going forward and consider any expansion outside of Maryland. I and my business will relocate to another state ASAP without questions or regrets, and others will follow. I can't afford to pay overwhelming taxes and lose money daily just to keep my business going. And so, these are real people, and these are real people that are going to be going into, like you said, that this problem will just be exacerbated, and it's not just consulting with services in other states, it's actually leaving the state. And that's my biggest concern, because we're already losing businesses. So that's the last thing I'm gonna say, because, so is that, another additive concern? And so we do have to look at it in totality, but my concern is for the future and the strength of Maryland's economy and their employees.
I 100% agree with you. I mean, this is the purpose of a hearing. And one of the things that is helpful, I assume everyone behind me represents certain sectors, is to hear the in-micro detail about how this plays out. But again, at this point, I think we have this conversation sector by sector, going through the NAICS codes and seeing If there are specific things and arguments that could be made, things we should, again, things we haven't thought about, again, as we prep an option.
Thank you. Thank you for taking time.
Delegate Griffith.
Thank you, Madam Chair, and thank you for the thoughtfulness on the bill. One thing that you said last year about the reason you're bringing the bill that has literally haunted me for the last year, but it stuck with me, and I thought it was a very honest point, was that you had said that last year when you brought the services tax last year, you said there's a lot of people in the General Assembly that got elected on the juice of the blueprint, and now this General Assembly is stuck dealing with the squeeze, and I thought that has stuck with me. So a couple of questions. First, I want to dig into the housing piece a bit, because a lot of the housing advocates are here, and they feel they're still going to be impacted. And certainly in some aspects they will, because still people in the housing industry have to use additional services to let their businesses run. So would you be agreeable to an opportunity to carve out even housing, the housing industry, and the folks that provide our housing and trying to solve our housing shortfall to be exempt from paying this tax?
So again, this is a multi-cook effort.
Sure.
That you see here. I'm just one opinion among many, and at this point, frankly, it's a committee product. I told you at the start, however, from the feedback from last year and this year, there were some deliberate things that I tried to lean on and put my thumb on the scale, and housing cost, energy cost were two of them. So that's why you did see builders and I think references to residential and things like that, or they attempted to cabin the services away from that. And again, it's also why some of the legal services were a concern because of titling and things like this. So we tried to peel a lot of that out, but certainly it's going to be a committee product. So if you have further refinement or things you want to put back in, I've heard people want to put certain services like that back in, I think that's certainly up for you guys to consider.
And my next question, we have a lot of questions, a lot of people, but my concern is about the general structure of how this is ultimately going to play out. And I'm not calling this a pyramid scheme, but I see it almost as a reverse pyramid scheme where instead of the person at the top of the pyramid is benefiting the most, the person at the top of the pyramid is suffering the most, because we know in all these taxes, they're always passed along. And it's not just a straight line, it's not just this person to this person to this person passing along. It's person, at the top of the pyramid, having all the taxes passed through to them. And then for me and my company, I use, a dozen vendors. All those dozen vendors are passing along that 2.5% to me. Then all those dozen vendors, their dozen vendors, now up to 144, are passing along that 2.5% to me, and so on in a never-ending cycle that drills all the way down to the consumer or that business. So in actuality, if everything gets passed on, which we know it will be, because that's what happens to every single tax, that's not a 2.5% tax. It's 20, 30% tax when it drills down all the different pass downs all the way down to the end user. Can you speak to that impact of what it's going to do ultimately to the people at that end of the trail there?
So I've really tried to understand the pyramiding literature, frankly, because this was a discussion both last year and this year. And it's definitely a question. Different places try to address it with different mechanisms, deductions, or going for VATs or whatever. A lot of stuff that is actually not used. Some of it's not used in states whatsoever. So there are ways to get at it. But without getting at the pyramiding issue, I mean, one thing that just confounds me is how many states are already doing this and seemingly not running into the type of problem that you're pointing at. And you have whole states that actually have a scheme where all the services are taxed unless, they tax services by default and are not having that same issue. And interestingly, New Jersey and New York actually have, in terms of two neighbors treating this differently, New Jersey taxes a range of services and New York doesn't, So in terms of competitive situations, you definitely have two economic rivals sitting next to each other, choosing very different regimes on this. And again, seemingly with the pyramiding issue, not having driven these other states to see that as a major problem. I'm not suggesting I know the answer to this.
Sure.
So I would just want to put that out there. I'm not an economist.
No, I appreciate that answer, but I guess just a follow-up to that, and thank you, Madam Chair, is, but of those states that have this, like you mentioned, for instance, Delaware, right? But Delaware doesn't have sales tax,
They're all
right?
different.
So they're very different, and they don't have the same tax burdens or business climate as we do. So maybe your thoughts on a state that doesn't have certain taxes that we do that allow for maybe this to happen, or this scheme to take pressure off of income tax and things of that nature, versus our state where this is just one more log on the fire of our economy.
We have to look at that, and that's true. And, but to the Virginia issue, I mean, one thing they do in Virginia is they hide fees in very strange ways. And I've looked at numerous overall tax burden analyses of Virginia compared to other states, and I got to tell you, they're better at creating paper fees and this, that, and the other that just don't show up on the same U.S. News and World Report line-by-line rankings. That you can game those state-by-state tax analyses. So I just want to be clear on that aspect of it too.
All right. Thank you, Madam Chair.
Delegate Hartman.
Thank you, Madam Chair. I have one question for the Comptroller's Office and one for Delegate Moon. So we'll start with the Comptroller. So if someone has goes to an accountant as an individual and has pass-through entities, LLCs, for real estate or whatever, they file their taxes, they get one bill for tax services. So that, since this is business to business, how would this apply in that situation? Should that person separate out services, or is it because it's a person and their pass-through entities, it doesn't apply?
If a pass-through entity is purchasing accounting services, that would be business to business. If you are you saying if
They're
an
bundled.
individual is
I
a
go-
member of a pass-through entity and they just need their own personal income tax return
I
prepared?
go get
is
my
that-
taxes done. I have a few LLCs for protection and liability for real estate purposes, let's say. I get my taxes done. Here's my real estate. Although it's titled an LLC, I'm the individual. How does that accounting work?
Even a single-member LLC would be a
Correct.
business.
So separate it out, or since the person paying it is the individual personally striking the check, Wayne Hartman, for those services, the other services are just falling in there. Would that get hit by this legislation?
I think we have that issue now with with a goods purchase. You would have the same question. I mean, someone can be reimbursing someone, but it's collected at from the person making the payment. I don't know that will solve what happens if people are commingling in that way any differently than we would for a sales tax issue.
So I guess
And sorry, and let me just flag a couple more things that you're sort of reminding me of. There will be another policy question as to subsidiaries and related entities as to whether you want to make them apply a tax on it. We had a similar question like this years ago with Lockheed Martin's private conference center, which was wholly within their corporate campus, as to whether a hotel and lodging tax applied to that. So either we put those in or out.
Okay, so we'll leave that cloudy issue on the side for now. The last time we were here, it was late in session. It was a tax on services that would have been paid by the end user, such as dog grooming, dry cleaning, all those sorts of things. This bill is very different. It's business to business. Was there a different intention in this legislation versus the last? I mean, are we thinking?
That's definitely, I mean, you can, in addition to some of the other ones I raised, housing, energy, you can definitely say there was a lot of feedback from committee members and people outside about the personal care services being contemplated. People didn't like the concept of the barber or the dog walker having to go through all this, and certainly a lot of those are the smaller entities too, in which case the sort of administrative discussion we're talking about would have been a real one. So we pulled as many of those folks out as possible, to your point.
So the Maryland Chamber says we're the third highest state to do business, and here we are with this bill in front of us, that would probably make us the highest state to do business. So with that answer, I'm just trying to get clarification on the intent of this, because early on you said you want to trim out blue-collar workers. I guess you mean, like the governor, you're trying to avoid hitting the middle class. Is that what you meant by that, trimming out?
Well, there's also professional type categories are heavily represented in the NAICS codes gathered here.
So if a
And again, just in the state impact, like many other states actually, when they did services, they chose to heavily go after those sorts of personal care kinds of services. And so this would be a bit of a break from what many of our other states have done.
When we talk about other states, though, when you say other states do this, other states aren't in the situation where we are, where like the, I guess, 46 or so highest personal income tax rate. Other states may do this individually, and I think it was mentioned that, but it seems like Maryland does them all collectively and at a much higher rate, which I think puts us at the top of the scale when we look at things as far as where we are in perspective to the rest of the country. But what I'm trying to get at, I need to understand the intent of the bill. Are you trying to tax businesses because you think it's different than taxing individuals? Delegate Hornberger was talking about going to Delaware, and there you said, well, there's a gross receipts tax, and they build that into the cost. So there you're saying taxes are passed through. Delegate Long was asking about the possibility of this being passed along, and you said, well, it's up to the business. So, here I'm kind of confused. If we have a restaurant that's getting all these fees, let's look at the small businesses, a restaurant for accounting, landscaping, all those kind of things. Do you think, what part of this tax do you think is going to be passed on to the consumer? What part do you think a business is going to absorb? I'm interested in knowing.
I can't predict how people are going to choose to do it. It's just a part of their overhead. So they'll have to make a decision as to what, again, it's going to be different for everybody. I mean,
so when you were talking to Delegate Hornberger and talking about the Delaware situation where that's passed through, you think that could possibly be different now?
they chose to put it in that form. Again, so these are all options. The one last year, but again, you have to also talk to the comptroller's office about what they can implement quickly, because part of the ease of implementation here is, again, building off of an existing, already implemented sales tax model versus, say, like a Delaware gross receipts model. But again, I don't want to keep harping this point, but the tax is like, it's 6% in West Virginia, so services. So
the last question, the governor's budget cuts the corporate tax. I've had a bill for 3 years to cut corporate tax. We're the highest. We stand, alone. Pennsylvania's going down to 399. They're showing clear intent to businesses that are looking for a place to go, and the businesses that are there, they have a stable business environment. They know what they're going to be playing in. They know the rules in the sandbox. You know what I mean? Maryland, every year, we keep throwing all this tax policy, and I don't think businesses know what the rules are going to be from one year to the next. So with the governor's suggestion of lowering the corporate tax, do you support that going from 8.25 to 799? Is there going to be any reason to do that when we're putting another business there? Help me understand your thoughts of the two.
Offered as an amendment, honestly. I mean, this is an open product. It's in your committee. It sounds like you have an amendment suggestion on that one. Again, I'm not the final arbiter for how this budget and tax basket is going to be constructed. I have my own personal opinions on what we do. If we do something like this, sure, it would be great if we can pick some business items. But again, this is just an option in a basket. Your committee is going to take the first crack at whether this one moves, and if it does, in what form. And then there will be additional discussions here as to how this balances out with cuts and the other revenue items, and then the Senate. So there's just a long way to go. But you flagged correctly that the governor had multiple items on the topic of businesses, so we'll see.
Well, thanks for the dialogue.
Delegate Vogel.
Thank you, Madam Chair, and thank you, Delegate, for this bill. I think there's a conversation to be had on the merits and the specific details of this bill, and we've been having that already. I just want to bring us back to the context that we're in for a second here. And my first question to you is, this is happening amidst other cuts to the budget, correct?
Yes, so the governor's starting point was $2 billion. I know some of the presiding officers have been looking at additional cuts. So from a starting point of a $3 billion deficit to begin this year with, I think we're well approaching $2.5 billion, so there are many cuts already underway. And we'll know soon what the final list of them looks like, and people can evaluate what those look like. But every $100 million in cuts just to, every $100 million in additional cuts, just to put this into context, is going to be thousands of people booted from Medicaid rolls in all likelihood. So we have to put this all together when we make final decision.
Right, thank you. And I want to put it out there that this sucks, right? We're here in this position not because of what we're doing, but rather because of the consequences of an administration in DC and
Okay, everybody, if you can't remain calm, I know this is a very important issue and people are emotional about it, but if you can't remain calm, you can't stay in the room, okay? There is no commentary on what anybody says in this room. Everyone has a difference of opinion and everybody's entitled to that opinion. Thank you.
Thank you, Madam Chair. And the reason I say that is because we're seeing consequences, whether it be tariffs that are hurting small businesses. I'm hearing from folks that are really concerned about rising costs there. We're seeing the threats of cuts to Medicaid, hundreds of billions of dollars in cuts to Medicaid and food assistance and a number of essential programs. There's talks now about shutting down the Department of Education, which would cut Title I funds for students in our state, all to cut taxes for corporations and the wealthiest Americans by trillions of dollars. The consequences of those actions don't stay in DC, they end up here in Maryland. So my question to you is, if we don't take action while we have these devastating cuts, not to mention tens of thousands of federal workers laid off, what happens to our state? What happens to our schools? What happens to our SNAP benefits? What happens to Medicaid recipients in our state?
I think you're asking the right questions, and these are the things we'll have to balance. But I mean, look, to the folks that were just groaning, I feel that groaning. I totally get it. You don't want to, you don't, no, I'm not trying to, but I just want to be clear, I'm not trying to skirt the state's responsibility for getting out of the deficit. And this is why I want to highlight every single time that we started this conversation with billions in cuts. We are doing it. I promise you, we are doing billions in cuts. I promise it. They're slowing the blueprint. There's billions in cuts, more coming. And we have to make a decision with what to do with what's left. The unemployment rolls are doubling by the moment. It's going to be folks as employees and contractors coming through the system. We know that for a fact. The 280 to 350 million that was announced by the Board of Revenue Estimates was a floor. It's a floor, and it was not factoring in whatsoever any private sector cuts. So big cuts are coming to Maryland, rest assured.
Delegate Roberts.
Thank you, Madam Chair. Hi, Delegate Moon. I just wanted to be clear in understanding on how this bill works for certain sectors, specifically as it relates to government contracting, because the fiscal note talks a lot about NICS codes, and I guess the bill talks a lot about NICS codes and everything. And I just want to know so let's just take the Key Bridge. So Kiewit won the contract to rebuild the bridge. So the businesses that he subcontracts to, they will be taxed for what Kiewit is paying them to do. Does it work under government contracting as well?
So we have to talk about the direct tax and the tax that one is assessing as the business providing the service, and the tax that one is paying as a consumer of a service. I have to, and don't hold me to this, because again, there were many cooks on this bill, but I do believe as to the direct bridge construction activities, that those were pulled, those kinds of things were pulled from the bill. Now, as to whether a bridge builder hires a paychecks.com or whatever for its payroll services, yeah, then certainly there's overhead costs where some of the consumption of services would be taxed. And this is also reminding me, the comptroller's office can stop me if I got this wrong too, that again, the sort of parallels here, if you're a nonprofit with a sales tax exemption certificate, that would parallel apply to the services tax exemption, I believe.
That's correct. If you're already a holder of a sales news tax exemption card, just the expansion of the sales news tax base does not affect, you are still exempt entity.
So a government, a nonprofit would be exempt. And again, as to the bridge question, the direct construction services, I believe, are not in the bill, but there may be overhead that they pay when they purchase services.
Okay. But it does not impact when the government pays a contractor for a service, because it's just straight business
I
to
believe the
business.
government would be exempt just as under the sales tax.
Okay, thank you, Madam Chair.
Okay, are there any other questions from the committee for Delegate Moon or the comptroller's office? No. Okay. So I just want to be clear, Delegate Moon, you are not on this committee. This is, you put this bill forth as part of a series of options that the committee is already considering, including the governor's bill, which folks have mentioned, which has not passed, so we don't know what, if any parts of that are going to pass. This is an option to consider with all of that in totality, along with all of the cuts. And it's this committee's job. It's this committee's job to take a look at what we need to do to continue to protect the citizens of Maryland and everyone that lives here, including all of the, Moody, is taking a look at our bond rating, and for the first time ever saying we're in jeopardy because we're gonna have thousands of workers lose their job, particularly in St. Mary's, in Charles, Montgomery, and in Prince George's counties. I think like 20% of our gross income in the state of Maryland comes from federal government jobs. We have individuals who, we're in jeopardy of losing a significant amount of social safety net programs here because of all the cuts coming down from the federal government. So, we're in a difficult decision, and I'm sure everyone who is sitting around here did not think that we would have to be making these tough decisions, but that's why we got elected, and that's why we will consider your bill. And so thank you for bringing it forward, and thank you for being here for questions. We appreciate your time.
And Madam Chair, I'm going to try and stick around and listen to as much of the opposition testimony as possible. At a certain point, I have to chair a meeting, so if you see me leave, it's not because I'm not listening. I will review the feedback when I leave the committee on video.
Yeah, your
also.
chair already texted me. So you're happy to sit on the end here because we have a full room.
Thank you.
Okay, so thank you. I'm going to call folks up just in a series of 5 as my list reads. So if I call your name, please step forward. Rebecca Olson, Paul Nolan, James Stark, Skip Flatko, Harold Moan. Okay, I'm just gonna keep calling. Heidi Schmidt. Nick Damoukolis, okay, come forward, sorry about that.
You're good.
Okay, and I think that has, okay, sir, we could just start with you, and then we'll just work our way down, and just everyone say your name, please.
Madam Chair, good afternoon. It's a pleasure to be here in front of this group. Under different circumstances, be even more pleasurable. My name is Paul Nolan. I'm Vice President of Tax, Government Affairs, and Strategic Real Estate for McCormick & Company, Inc. We've been in the state nearly 140 years. This tax is a great concern to us as a headquarters company here. Basically, and I'm going to be very short because you have so many witnesses and I want valuable time. This is the wrong tax at the wrong time. It is guaranteed to stifle economic growth in the state. It'll discourage new companies from coming here, whether forming or moving, and it'll encourage those of us here to consider other locations to receive any of the services that are taxed here. Because much of this activity can be migrated, and particularly a headquarters company with a large number of people here, the people do not need to be here to do a lot of the work and the services that we receive. We're talking about advertising, consulting, design work across the board, high-end professional work that we receive as part of our business. So at a time when, admittedly, public sector jobs are challenged, to take private sector jobs and impose this burden on them and basically increase the costs across the board for all private sector companies will generate less private sector jobs, generate more unemployment claims. It's exactly the wrong thing to do at the wrong time. Madam Chair, in the interest of time, I appreciate the opportunity, and I'll stop. Thank you.
Good afternoon, Chair Atterbury and members of the committee. My name is Rebecca Olson. I'm a proud Maryland CPA and the CEO of the Maryland Association of CPAs. On behalf of my 9,000 members, I'm here, they would like to be here as well, but of course they are in their most busy time of year. 5 years ago, accounting services were deemed essential to keeping Maryland afloat during the COVID-19 crisis. And now this bill seeks to tax those very same services, the ones that businesses really rely on to comply with the laws created. This bill is a tax on compliance itself. If a small business hires a CPA to ensure that they're meeting their tax obligation, this bill would tax them. If a business requires an audit to secure funding, this bill would tax that. This bill also disproportionately hurts small businesses. While large corporations, even like McCormick, have internal teams, small businesses must rely on external CPAs. This bill increases their costs, making Maryland businesses less competitive than their neighbors just across the border. We've been down this road before. 2007, Maryland's computer tax services was repealed just months later because of the administrative burden it caused. This bill is bad policy, and it's bad for Maryland's economy. It drives businesses out of the state, it increases costs for small businesses, and it creates administrative chaos. On behalf of the CPA profession in Maryland, I respectively urge an unfavorable report for HB 1554. Thank you.
Good afternoon, Madam Chairman. I'm Jim Stark. I'm the VP of Hotel Operations for the Best Western Plus BWI Arundel Mills located in Howard County, Maryland. I just want to come and drill this down to what this means to small business, my small business. We might be part of a larger flag, but we're independently owned and operated. We're a 133-room hotel, again, in Howard County, and I employ between 40 and 50 employees. And just to look at this and put it into the context of all the other increases that are either have come our way or will come our way. Increased labor expenses, increased insurance expenses, increased costs related to BEPS, which is passed, and the implementation of BEPS, and increased energy costs that's going to come in our delivery to our energy bill. I believe that happens on 7/1 of this year. All of these things add up. This particular tax for us, for our business, 133-room hotel, the average size hotel in the state of Maryland is 115 rooms, is tens of thousands of dollars a year. It's anywhere from $25,000 to $50,000, depending upon which code you look at in the definition of sort of that code. And unlike, and I don't mean this with, I mean this with all due respect, unlike government, we just can't, when we're looking at our budget, snap our fingers and increase the top line. When all of a sudden our already small margins get smaller, we have to look at spending. So that means reinvestment in our businesses, that means our employees, that means other things, associated with how we operate. And we're in the communities, we give back to the communities, we're members of the communities. I look at my staff as family. And any decision that I make, I look and see how it impacts them, and I implore you to do the same. Thank you very much.
Good afternoon, Madam Chair, members of the committee. Today I'm here as a small business owner and as Vice President of the Pasadena Business Association to express my strong opposition to HB 1554. While the state clearly faces budget challenges, implementing a B2B service tax would only exacerbate these problems over the long term by negatively impacting opportunities for business competitiveness and would disproportionately hurt small businesses like my own. Unlike large corporations, small businesses we outsource professional services for essential business functions. This tax would add thousands in new annual costs for small businesses already struggling with economic pressures potentially forcing difficult choices between raising prices, reducing staff, or cutting investments in growth. This proposal directly would increase my tax burden by approximately $4,000 to $5,000 a year, forcing me to make difficult decisions about increasing pricing and plans for future growth. That estimate doesn't even account for increased costs that I would face from services such as my accountant, such as my bookkeeper, or other marketing services. This legislation would also create significant administrative burdens for businesses to track, collect, and remit this new tax. This is particularly daunting for non-retail small businesses who don't have the infrastructure in place to collect taxes as part of their business process. While today's proposal narrowly targets specific services at a seemingly innocuous 2.5%, creates a troubling precedent, opening up a new category of economic activity to taxation. There's no reason to believe that it will stop here. Future budget shortfalls could easily lead to rate increases or expansion to other essential business services. On behalf of myself and members of the Business Association, I urge you to reject HB 1554. Oh, Heidi Schmidt, sorry.
Madam Chair, members of the committee, I'm Nick Dumalakis, CEO of Orsis, a 54 full-time employee company in Frederick, Maryland. My wife and I founded our business 25 years ago, specifically choosing Maryland because as young entrepreneurs, we were shoestrung resources and a dream. We couldn't afford going to DC or Northern Virginia. This bill proposed 2.5% tax on business-to-business services will devastate small businesses like mine for several critical reasons. Financial viability, we operate on thin profit margins. Maryland already ranks as the 4th worst business tax climate in the nation. Our neighbors in Virginia, Delaware, and Pennsylvania have more favorable tax climates, making it impossible for us to compete with firms just across state lines. And that's who we do compete with and lose to today already. Essentially business functions, accounting, IT, consulting, payroll, marketing, all newly taxed under this bill are not luxuries but necessities to operate. Taxing them means we'll pay more just to keep our doors open. Small businesses build communities. Orsis has contributed hundreds of thousands of dollars to local charities and nonprofits. We started the first girls flag football team in Maryland and worked with the Ravens and NFL to bring that sport to high schools. That was because of small businesses. We founded Tech Frederick, building Maryland's tech ecosystem. These community investments and future ones will be lost if we are forced to relocate. I grew up in Annapolis. I chose Frederick. Vote no.
Okay, thank you. Questions, we'll start with Delegate Griffith.
Thank you, Madam Chair. Thanks for being here. And I want to dig into the real estate piece a little bit. And so the gentleman from McCormick, you said you handle real estate for McCormick, is that correct?
I'm responsible for strategic real estate, so the larger decisions about where we put plants, where we put offices, et cetera, yes.
Okay, so first and foremost, in this bill, and maybe you can't speak to this because you're more on the strategic side, but there's been some efforts to carve out different types of real estate in this bill. Do you see that being successful, or do you see there's still some liabilities in this bill affecting the real estate industry?
I can't go into the precise element of that. My focus is where do we have a location, and where we have a location is you look at all the economic circumstances, and as you know, Maryland rates very low with a lot of different objective measures, and so any site locator site service will obviously weigh this fact in as well. In terms of the precise real estate industry itself, I'm not going to try to answer that.
Well, and to follow up on that, it's more specifically, and anybody can answer this question, but since you're dealing with this very issue, McCormick is one of the standard bearers of business in our state, right, in Old Bay and so on and so forth, right? So I guess my question is, if this was to pass, what would other states in our region do to roll out the red carpet to try to lure you from us?
Well, the company is always looking at its numbers quarter by quarter and looking at all costs quarter by quarter. This would roll through our costs and it'll be very substantial. I can't say the number, but it's very large. And I've seen a lot of efforts made to save half of this amount where employees were relocated, businesses were restructured, et cetera. So this isn't a threat like we leave the state, but they're only increments. There's decisions that are made about, well, why do we have this function here and why do we have that function here? We're a global business. We're in 40 countries. We're competing globally against, competitors in Singapore. And so why do we have a global headquarters in Maryland? Well, we grew up here and we like the state. At the same time, we have to look at our costs. We work for our shareholders, and our employees are a lot of our shareholders too. And so we would take a very careful look, and we'd have to say on the increment, does it make sense to have this extra cost just to be here, to have our, our enterprise software systems based here, to have our advertising based here, to have a legal department based here. We can go down, I can just keep naming functions like the other witness just did. Take too much time. But basically, any element of our business that's not related to actually the physical plants could be moved.
Thank you very much.
And if I could speak really quick, if you don't mind, to the small business aspect of it, right? And this is what it means to a lot of us in the room and a lot of hotels. You have to look at every added expense, and we've had a lot of them and we have more coming, reduces our profitability. And as that margin gets small, a lot of us have mortgages. A lot of us have to answer back to our lenders, and if our ratios, our debt ratios aren't in line, they can do one of a handful of things. They can increase our interest rate. They can even call the mortgage, okay? And all of these things affect business, and it also, too, it affects profitability, which affects value. Things that affect value long-term here, not the next couple of months, but long-term, affect, that value is also what we get taxed on for real estate. So in the long game, you're actually going to be losing money or losing potential revenue, for short-term gains, long-term consequences.
Sure, when you combine the rate and increases in things like minimum wage, healthcare expenses, inflation, some things we can't control. So absolutely. Well, thank you very much. I appreciate it. Thanks for being here.
Delegate Miller?
Thank you, Madam Chair. I heard two phrases that kind of struck me, and so this is for Ms. Olson and then Nick from Orisis. For Ms. Olson, you said something about administrative chaos. Can you describe a little bit about that, especially from an accounting terms? That does not sound good. So can you explain a little bit about that part for me?
Yeah, just you think of services, right? And where those services are performed and where those services are received in our day and age can be anywhere. I could be servicing a client that's based maybe in Maryland, but the employee that I'm working on their service particularly happens to be in Pennsylvania. They move a certain part of their associate group, the legal group, to Virginia. They move all of those things. There's not a location. When you do sales tax on goods, you know where you are at the time where it's received. Services is just a very different process. And so the administrative burden of creating all of these systems and processes, and honestly, the consulting that's going to go in to all the businesses that have to add this into their service, there's going to be taxed on that, right? So how this pyramids, basically, it's a pyramiding. You get taxed at different portions of services that every small business is having to use: marketing, internet services, computers, accounting, all of these different things. It starts to add up very quickly. So it's not just a 2.5% on one small business. It's that times how many of these services are they using. So just for us, I know the Comptroller's Office spoke earlier. We've seen the implementation date is very quick, and I don't feel, I'm not sure that our businesses would be able to be ready for these things by that implementation date. And I know the Comptroller's Office is already very short-staffed as well. So I have major concerns around that part.
And I appreciate you saying that, because as I did point out, they have to hire 3 people themselves, plus the software to go with it, which might not be easy to implement. So thank you for bringing that. And then, Nick, thank you. Thank you for being a part of Frederick County, and of course, everything that you contribute to our community, and I'm sure all of you contribute to your communities. That's what small businesses are, the heart of the community. And so when you said it would be impossible to compete, that's what kind of struck me from your testimony. So could you, I of course love that you're in Frederick County, would love to want you to stay. Want you to stay in Frederick County in Maryland. So if it's impossible to compete, what does that mean for you?
Cheryl, a 30-minute drive down the street.
Yeah, pretty much where we are, right? Yeah.
I don't want to do that. I want to be very clear. I want to be in Frederick, stay in Frederick, stay in Maryland. I love this state. I just don't know. I mean, we're not competing with just Delaware and Pennsylvania. It's worldwide. And there's a lot of technology that's coming out that's going to make these margins even thinner. So, you know, if you guys want to get into that with AI agents taking over some jobs too, we can talk about that, but it's very competitive.
Thank you. Thank you.
Okay, thank you all very much for being here. I'm good. Okay, what's your name, sir? Okay, yep, please have a seat. I was just going to call you again.
Me also.
Harold? Yep. Okay, Alan DeLeon.
Oh, wow, I'm going to have all the CPAs up here.
So I didn't, what's your name? I don't think I called you.
That's Alan Dillion.
Oh, you were quick, thank you. Grayson Wiggins, come on up, and Lisa May.
So good afternoon. My name is Alan DeLeon. I'm a CPA in Maryland since 1978, and I founded a firm, DeLeon and Stang, with 2 offices in Maryland and 1 in Virginia, and employs over 60 employees. I'm also a past president of the Maryland CPA Association. And I've lived in Maryland for 47 years, so I'm here today to testify in opposition to HB 1554. The proposed sales tax on business is detrimental to Maryland businesses since it adds to the cost of accounting and tax and payroll preparation services. So these are services that are required because they're required by law. And so to tax them is almost like a tax on a tax. So it seems kind of it's kind of absurd. We think also the proposed legislation would be very difficult to comply with, and that's been discussed already. I'm not going to go into that, but it has to do with where is the service provided, where is the customer, and basically how do you enforce it. And a number of states have had a sales tax on services over the years and have repealed them. And part of the reason they repealed them is because very difficult to comply with. So I think Maryland needs to turn around its anti-business climate, and I'd be interested to know what the fiscal note would look like if they considered what would happen if you lowered taxes and brought more business into Maryland. Thank you.
Good afternoon, Madam Chair and committee members. My name is Skip Flatko. I'm a CPA from Baltimore County, and I'm here to express my strong opposition to HB 1554. We have concerns. Number one, it will harm small businesses who tend to outsource their CPA and tax service, their accounting and tax services, compared to larger companies who have an in-house accounting staff. There's a tax on tax aspect to this where companies will be paying a tax to comply with the tax laws. None of our neighboring states have a none of our neighboring states have a sales tax, and this would put us at a competitive disadvantage with them. The proposed law is not evenly applied and picks winners and losers, and that's not a good approach toward tax policy. And then finally, it's not business friendly in the least and will drive business and taxpayers away from Maryland. For these reasons, I respectfully request an unfavorable report for HB 1554. And thank you very much.
Madam Chair and members of the committee, my name's Harold Moan, and I'm a CPA, and I'm the Regional Managing Director for UHY, a national CPA firm, and I manage the Mid-Atlantic region. We have 3 offices in Maryland with over 100 employees. There are many reasons why this proposed tax is problematic. You've heard a couple of them here. You heard it from the previous panel. But I just want to focus on one of the governor's goals of economic growth, because in my opinion, you know, I've been doing this for a long time. The only way to grow the revenues is to increase economic production in the state. So that's really the only way to get the revenues there. If you continue to tax small businesses, my clients are all small businesses, medium-sized businesses, and they already talk about leaving Maryland. And you're just giving them one more opportunity. This doesn't make any sense to me at all. I've done the numbers. I know what it's going to cost my clients. Happy to share those with you at some point in time, but many companies, as you heard earlier, will think about moving to Virginia, Pennsylvania, Delaware. They have options. And so hopefully that you will reconsider this proposal, and we're in opposition to House Bill 1554.
Thank you, Madam Chair. Lisa May on behalf of Maryland Realtors. And we do thank the sponsor for attempting to keep housing supply out of this bill as much as possible. However, we do still see impacts from it. Our 28,000 members are not employees of their real estate brokerages. They are independent contractors. They're one-person LLCs, they're corporate entities, sole proprietors. And we see them impacted, not just the services that they use, but perhaps even on some of the services that they procure on behalf of their home seller clients. But more broadly concerning to us is that Maryland is becoming more and more unaffordable each year. Not just taxes, not just inflation, housing costs, of course. People have left our state because of it. More people are thinking of leaving our state because of it. And because of that, we are not going to be able to grow our economy and get it back on the path to sustainability. So you have very difficult decisions to make, not just on this, but also on the budget. As you make those decisions, we do ask that you keep those points in mind. Does this make Maryland more affordable for our residents, for our workforce, and does this grow our economy both now and into the future? Thank you.
Good afternoon, Madam Chair, members of the committee. Grayson Wiggins here on behalf of the Maryland Chamber of Commerce. I think the reasons that many of the businesses are here today is that Maryland is currently the third most expensive state to do business in. Our tax climate is ranked 46th in the country. Our job growth rate is consistently ranked in the 40s. And since 2019, Maryland is ranked 44th in new business applications. I know the sponsor. I believe he's acting in good faith. I believe him to be a good man. But this bill does beg questions. How can we as a state say that we are supportive of job growth and job placement when this bill taxes job placement services? How can we say that we support economic opportunity and small businesses when this bill taxes pretty much every critical service that small businesses utilize? And I'm concerned that we're saying that we want to support federal workers and contractors, but this bill taxes many of the industries that those individuals will now be looking for employment within. And data consistently shows, and studies show from independent entities, including NCSL, that these type of taxes increase costs for consumers, they limit job growth, and they drive away business investment. And so I think those questions lead us to a critical juncture. This bill seeks to tax many of the pillars that Governor Moore has identified as, or many of the industries that Governor Moore has identified as pillars in our economy. And for those reasons, we are opposed. Thank you.
Okay, there's a couple questions. We'll start with Delegate Buckle.
Thank you, Madam Chair. And I think certainly anyone can chime in, but I think Mr. Wiggins from the Chamber of Commerce may have more finite knowledge about this. I read something where, there's a very progressive group appears in front of our committee frequently, the Center for Economic Policy, I think, if I'm getting that right. They promote a wide variety, they advocate for, they support a wide variety of tax increase proposals that we see. It's my understanding they've come out in the last day or so and said they think this one actually has a negative impact upon the economy and will raise taxes for, sort of middle-class consumers. Is that your understanding?
Thank you for the question, Delegate. I don't want to speak for any other organization. I will just say, my understanding is in the Baltimore Sun article today, some of those organizations did indicate that they agree that this will raise prices for consumers and that they do not think this is the best idea to move forward with.
And then just also in addition to, you mentioned about, because you guys are obviously attuned to efforts to increase our private sector economy and problems we have, I was a little shocked. So the bill includes employment services. So we've talked an awful lot the last few weeks about Maryland's susceptibility to having federal government workers that are not going to be probably working for the federal government, at least in the short term or maybe the long term. The bill raises taxes on employment services. Is that the Chamber's understanding that includes people, when you need a job, you go out and you connect with an employment or a placement agency, they provide that service, and they're not going to have to raise the costs for those services on folks?
That is our understanding, and it is doubly concerning given that the state's job growth rate last year was 0.9%.
Yeah. And then data IT services, I hear an awful lot, which I support. I support the governor's theories of we need to be the best in quantum and AI and cybersecurity and these data things. But I'm looking at the fiscal note. For whatever reason, the experts in reviewing where this bill would go, it seems like they would increase taxes on people in the data and IT sector by anywhere from $400 and some million to $600 and some million. Do you get any feedback from your members within your organization about we're not going to be able to sustain that? We either pass the cost along and it's going to devastate our end consumer, or we're just going to leave. We're just going to go do it somewhere else.
Thank you for the question. One company has indicated they will leave, and we can provide information on that. I know another company, an AI company, recently left for Virginia based on the state's tax climate. And we have a lot of questions. I didn't have time to get through all of them, but I continue to question how we're going to be a tech hub and the home of quantum computing if we are taxing those industries. And my understanding is this bill would tax them far beyond any other state in the country.
Yeah, they seem to be, for whatever reason, I don't think that was the sponsor's necessarily intention or singling them out, but the way that it seems to operate is they are the biggest chunk of the billion plus dollars that we would assume we would get under this would come from those industries. Thank you for that information.
Delegate Hornberger.
Thank you, Madam Chair, and this is a great panel. This is probably more aimed towards the tax preparers. So I have to imagine that you're advising your clients, right, on keeping their books in order and what they should be taxing for. There's a lot of questions about the scope of this and who it applies to. If there's a point where someone's on the fence, if they're providing a service on whether or not they should be charging this tax, I would think that you're always going to advise them to just go ahead and capture that tax, because the net effect is if the comptroller's office comes along at that end of the year and says, hey, client, you should have been administering this tax, you didn't, well, now you're on the hook for all of those remittances throughout the year. And that, for small businesses, that might be a big enough hit to shutter the business. Could you speak a little bit to that? I mean, how are you going to advise your clients to be in compliance with this? And
well, I think it's going to depend on the comptroller's office, right? I thought I heard the comptroller's
well, the answer is they don't really know.
I thought I heard her say earlier that if the company is in Maryland, they have to get charged the tax. Mm-hmm. So that's pretty clear for those of us and for our clients. I'm not so much worried about that. I'm worried about a business that that uses all those services on that list, because their expenses just went up by almost 3%.
Right.
And where's that coming from? They can only charge more, or they're going to make less, or they're going to go somewhere else. So.
Well, and I, if you don't want me adding, let's say you have a service provider in another state who doesn't register, doesn't know they're supposed to charge a tax, and then the comptroller's office does an audit, and that business then has to pay the tax.
Correct.
It wasn't collected in the first place.
Customers
penalties and interest accrue, and that becomes a big bill.
Correct.
Okay. Yep. Yeah, that was my concern. Okay, thank you.
To the
Delegate, I'm sorry.
To the administrative chaos idea that was presented earlier, if you have a Maryland CPA firm doing audit work or tax work for a client in Pennsylvania, Virginia, Maryland, you run into allocation and calculation issues that are extremely difficult to deal with under this proposed law.
Delegate Griffith.
Thank you, Madam Chair. Thanks for being here. And Ms. May, this is directed towards you. So obviously we're pounding the desk as a state on housing, 80,000 units upside down right now. Prices skyrocketing because of lack of inventory and obviously issues around mortgage rates and things of that nature. So even though they've attempted to do some carve-outs around real estate, and there's still some question as to that, there are still ancillary things that are directly impacting, like, so, I do title, right? So I have to pay for extractors, I gotta pay for closers, I have my accounting, I have quality, I have all these other services that we have to charge that's gonna raise my rates, that's gonna be passed down to home buyers, right? And they're the ones who ultimately are going to bear the burden, at least for my industry, and certainly your industry, because obviously realtors have a number of costs too that they have to incur, and it's more than just my fees, because again, I go back to the point, my service providers are now having to pay a services tax as well. So that 2.5% compounds and compounds and compounds. Can you speak to a little more about exactly how this is going to have a negative impact on folks, especially low-income Marylanders, from acquiring housing and getting that American dream?
Well, this bill is a week old, so some of us are still trying to get our hands around exactly how, all of these services do work together, whether they are going to be charged on, let's say, Lisa May Realtor LLC versus Lisa May individual, and that sort of thing. But even, off the top, if you're selling a home, you need photography for your listing. It's going to be listed on a website that is hosted somewhere on a brokerage or your own personal website, or maybe both. You're going to have marketing for that property, printing, all of those things. So all of that will either come back to the seller in the compensation that they provide, or there will be additional fees that are charged in addition to the compensation to essentially make that brokerage or that agent whole. Then they're going to go to their accountant, and then they're going to, so on and so on.
What even the technology to list the property, right?
That is an open question. Again, based upon, is the subscriber to, say, the MLS, is that an individual or is that a business?
Correct. Thank you.
Correct.
Thank you, Madam Chair.
Thank you, Madam Chair. And Grayson Wiggins, can you help me a little bit with, I don't know, maybe, have you reached out to the comptroller's office on behalf of the chamber, anything like that, to get some clarification? Because I am seeing a difference in what was said and in what was said in the small business effect of the fiscal note, which said, which I'm sure you look at fiscal notes just like I do, expanding the number of services subject to the sales tax may result in a decline in business purchases of these services in the state. To the extent possible, a business may purchase services in neighboring states where these services are not taxed or taxed at a lower rate, or may choose not to purchase these services at all, and to the extent to which this may occur cannot be reliably estimated, but the majority of Maryland residents live within a short distance of a neighboring state. So I'm kind of confused given some of the testimony that the comptroller had, and I don't know that we have real clear direction.
I would say that's in contradiction to what she said today.
Right, that's what I was thinking, that's what I heard. Has the chamber dealt with that at all, or watched that, been asked for any clarification or anything?
Yeah, I don't know. I mean, I think that the bill is very new, and so I'm not sure that's been really considered
Been looked
yet.
at? Okay, well, I will certainly ask for it. Yeah.
Thank you, Madam Chair. Thank you, Delegate. Yeah, we've had some ongoing conversations with the comptroller's office. I think the breadth of this bill and the compliance issues that it has raised there's a lot more questions that we continue to have. And to your point, there does seem to be some contradictions in the fiscal note and what the comptroller's representative testified to. And that is not the only discrepancy that we're aware of. I will be candid. It was very difficult to get into the room because it's so packed. So I missed some of her responses, but we are having ongoing conversations with them.
Well, certainly, if I can help, I'd like to do a letter of clarification to the comptroller's office to kind of figure out these details then. Thank you.
Okay, any other questions for these folks? Okay, thank you very much. And as seats open up, people who are standing, feel free to try to sit down. John Skinner, Louis Campion, Ada Keener, Clark Rector, Matthew Kraft, Lori Nieto, Nancy Egan, Aaron Greenfield. Oh wait, I think that's 5. So Aaron, can you wait? That was 5. Thanks. You'll be on the next group. Okay, if we could just start this way and work our way down that way.
Good afternoon, members of the committee. My name is Clark Rector. I'm the Executive Vice President for Government Affairs at the American Advertising Federation. I'm also a resident of Howard County and happily reside in the Chairwoman's District. I am here to express our opposition to the advertising tax provisions in the bill under consideration. AAF represents all parts of the advertising industry, from clients to agencies to various media, as well as local associations, including a very strong chapter in Baltimore and a lot of members in Washington, in the Washington, D.C. chapter who live in Maryland as well. I just want to very briefly talk to the committee about the importance of advertising and what it does for the state of Maryland. According to a recently updated study, which is designed by Lawrence Klein, who won the 1980 Nobel Prize in Economics, in 2024, advertising generated almost $94 billion in economic activity here in the state of Maryland. It helped support 469,000 jobs, or almost 17% of Maryland jobs. And every one advertising job supports 20 jobs across multiple industries in Maryland. Increasing the cost of advertising would lower all of those things. Advertisers have a very fixed budget, so if you increase the cost, they're going to lower the amount of advertising that they do, and that will lower those economic benefits that come through Maryland. I would remind you that Maryland, as a small state with a lot of borders, is easily reached by media from across the borders as well. And so it's very easy for advertisers to go across and reach Maryland consumers from other media outlets.
Thank you. We're going to have to ask you to wrap up.
Okay.
So you oppose the bill?
We are opposed to the bill, yes.
Thank you. Ma'am.
Good afternoon. My name is Nancy Egan, and I represent the American Property Casualty Insurance Association. Our members write 71.4% of the property casualty market here in Maryland. Currently, there are 30 property casualty insurance company domiciled here in Maryland, and 33 property casualty insurance companies are headquartered here in Maryland. In fiscal year 2023, the insurance industry, that would be property, casualty, life, and health combined, paid over $682 million in premium tax, in comparison to the general corporate income tax, which took in $1.8 billion. So the insurance industry paid over 1/3 of the taxes that nearly all other industries combined paid in 2023. Maryland's premium tax currently is 2%, which is above average from across the country. The new sales tax would make Maryland less competitive and less attractive, since insurers' cost of doing business, both claims and general operating expenses, will be higher. These companies will consider taxes when considering whether to continue to keep their headquarters here in Maryland or whether to relocate to a neighboring state such as Virginia. This legislation would also increase claim costs associated with heavy truck and bus repairs at a time when claim costs and expenses are skyrocketing across the country. The new tax will translate into higher expenses for insurance operating expense. In the end, your consumers and Maryland businesses who will be paying the additional cost in higher premiums when they least can afford it. And for those reasons, we oppose the bill. Thank you.
Honored representatives, my name is Matthew Kraft, the Chief Operating Officer for a local education technology company, Mosaic Learning, state and property, taxpayer, father of 2 Anne Arundel County Public Schools, and concerned state resident. I want to thank you for your time today and ask you to join me in opposing this bill, House Bill 1554. Before we start, I have a story to tell, just one story. A little over 3 decades ago, my sister, drugged cat, mother, and I packed our small home and made our way to Seattle from our family home in North Dakota. As a student, I met with the late former governor of Washington, Mike Lowry, just got stamped before they even called it that. I didn't understand tax policy, in some ways still don't, but understood the impacts of my friends as their parents worked at Microsoft, which at the time was kicking out over 10,000 millionaires a year. You see, when you don't tax something, like income and capital, you have more of it. Washington State had no state income tax. Favorable tax policy, along with top-tier local talent, fostered growth in Seattle that enabled me to put myself through college, buy my first car at 18, a new car, and first house a year later. Unfortunately, the 2001 recession hit the region hard. More favorable tax policy moved my first employer from Seattle to Atlanta in late 2001. That relocation hit me hard. More than a decade later, another shift in policy caused my former employer, a storied Baltimore County and Baltimore City company, Social Solutions Global, to make the move to Austin from Canton. That relocation also hit me hard. Both companies on a combined basis have 1,300 and 3,600 employees. Does anyone believe that we were better off without these companies, without these jobs, and without everything that they bring to the table? You know what our state gets in terms of economic numbers and grades. I don't need to remind you of that. What I will say is, please join me in opposing this bill, opposing the relocation of jobs out of this area that it may cause, and put us on a path to better success.
Thank you.
Thank you.
Thank you so much. My name is Ida Keener, and I think it's better to tell a story like my colleague just did. So mine is this. Back in 2000, I showed up in Maryland with a suitcase, an ex-husband who dragged me here, thank you for that, and zero clue of what came next. I made Maryland my home ever since. It's been 25 years so far. Became a US citizen 15 years ago, that took a while. And eventually, back in 2009, I built a Truant, which is a cybersecurity, managed security IT service company, who today we celebrated our 16th anniversary. And we were also able to compete with the big boys while we were staying rooted in Millersville. How did we do that? Trust. Our clients know we'll treat their tech like our own, white glove services, no shortcuts. But right now, that trust and Maryland's small businesses is under threat. The bill feels personal, and this is why. The tax to run a Truant, I need accountants, I need lawyers, I need marketing, and I need a lot of those services, and they need mine too. It's like charging me extra just for following the rules. Clients are hurting. Hardware cost is spiking. Computer that cost $850 3 weeks ago costs now $1,200. I can't do this anymore, and I hate to have to relocate. I strongly oppose this bill.
Thank you. My name is Lori Nieto. I work for Northrop Grumman Corporation in the aerospace and defense sector. Northrop Grumman has more than 14,000 employees in the state of Maryland, with locations across the state and hundreds of Maryland-based suppliers. We've enjoyed decades-long partnership with the state, which has allowed us to grow. While we understand the budget shortfall and need for revenue, we are opposed to this bill for several reasons: uncertainty in tax policy, compliance challenges, time frame, and most importantly, competitiveness. Northrop Grumman competes against companies in other states for programs with cost being a factor. Given our significant footprint in the state, this increase could impact our overall competitiveness. For the same service that we receive in Maryland, our competitor can receive that service in another state and pay 2.5% less cost, making them more competitive. As a company operates in many states, we have options on where we choose to grow. Thank you for your opportunity to speak.
Thank you. Are there any questions from the committee? Okay, seeing none, thank you all very much for being here today. Mr. Greenfeld?
Madam Chair, there were enough seats. I was called.
Oh, what was your name?
Lewis Campion.
Okay, yep, please have a seat. Thank you. Thought I was keeping track there. Okay, Darren Clark? Amy Rohr? Christopher Warthen? Okay, we'll start.
Madam Chair, for the record, Lewis Campion, Maryland Motor Truck Association, and we are here, urging an unfavorable. Our industry will pay all of the taxes that are included in this bill, but I'm going to specifically focus on the inclusion of heavy truck or bus repair. So we're going to pay the increased expenses associated with IT and payroll and accounting and printing services, but we're really double whammied on top of that because we are singled out as the only industry that would be paying on heavy truck and bus repair because that's what we do, right? We run trucks. And it really feels coercive because under federal and state law, we are required to get our trucks regularly inspected and maintained and repaired to ensure our vehicles are safe. That can occur as much as 4 to 5 times per year per vehicle on top of roadside inspections where law enforcement tells us that a repair needs to be noted. The greatest harm is going to be on small local trucking companies. 96% of our members are 10 trucks or fewer. These businesses don't have mechanics or maintenance shops. Larger companies do all that in-house, so they won't be subject to this tax. You know, we're delivering every essential product you need. We literally have nothing without trucking, right? Every diaper, every medication, food, clothing, it comes on a truck, and we urge an unfavorable. Thank you.
Madam Chair, Madam Vice Chair, members of the committee, Aaron Greenfield here on behalf of the Maryland Multi-Housing Association. We are in opposition to House Bill 1554, but do very much appreciate the sponsor's efforts to try and take housing as much or minimize as much of the impact on the housing industry as possible. Really to Delegate Griffith's point, Maryland is facing a severe shortage of affordable housing units with estimates suggesting that we need upwards of 96,000 units to meet the demand. This bill only exacerbates the problem by imposing a new tax on certain labor and services, such as landscaping and snow removal, pest control, and the like. Inevitably, those costs are going to be passed on to the resident, and it's going to further exacerbate the affordable housing crisis. We had one of our members, a Baltimore County area workforce housing provider, kind of assess what the tax would be on their property. In the course of a year, it would be $3 million, which would really result in about a $24 a month increase in rent per resident. So this will have a real impact, and for those reasons, we respectfully request an unfavorable report.
Madam Chair, my name is Darren Clark with Clark Computer Services. We're located in Frederick, Maryland, and we're an IT services company, and we employ approximately 40 Maryland citizens. I'm here to tell you that this proposed tax is a bad idea at a bad time. Due to policy changes at the federal level, I've already lost $750,000 in canceled projects that I previously considered secured sales. And the tariffs that they're putting in place right now is costing my business even more. I estimate that this year alone, my increases will cost by $320,000. Now with this proposed state tax, I'm looking at an additional $220,000 that I'll have to pay out. This puts me over $1 million behind this year that I wasn't factoring in at the beginning of the year when I was doing my business forecasting. This jeopardizes not only my business growth, but also my employees' job security. I don't believe we've recovered from COVID yet, and we certainly haven't recovered from the supply chain disruptions. And these new policies are creating chaos. Adding this state tax on business-to-business services is only making a bad economic situation worse. I implore everyone in this room to vote against this bill because you are worsening an already challenging economic situation. Maryland is ranked nearly last in business-friendly environment, and this bill will push us further down that path. Please say no to this bill.
Madam Chair, Madam Vice Chair, members of the committee, my name is Amy Rohrer, here on behalf of the Maryland Hotel Lodging Association. You have our written testimony in opposition to this proposal, and we also submitted a Baltimore Banner article titled, "No, Baltimore can't just sell the Hilton Inner Harbor because it's losing money." This hotel's struggles have been very public, and unfortunately, it serves as the poster child for the state of the industry in Baltimore City and the surrounding region. I am sorry to say that they are not the only hotel struggling, and Maryland's lodging industry is lagging behind other areas of the country. We have not returned to pre-pandemic occupancy levels, and statewide revenue per available room, which is a key metric for benchmarking hotel performance, is more than 13% below the national average for 2024. And while hotel rates have risen, expense has risen at a higher rate. You already heard from one of our members. There are more members who are here to testify, so I won't reiterate all of the expenses that have gone up for hotels, but nearly every service listed in this bill could impact hotels and will make it even more expensive to operate in Maryland. This tax would lessen our competitiveness as a destination in an industry that is highly competitive, and as we potentially lose business to other states, this has a trickle-down effect in Maryland's economy. We've seen more than a few hotels permanently shut their doors in recent years. This means job losses and less tax revenue for the state. We respectfully urge you to reject this proposal.
Good afternoon. Thank you for allowing me to be here today. My name is Chris Worthen, and I'm the Assistant Operations Manager for the George J. Falter Company, located in Baltimore, Maryland. We are the oldest candy tobacco distributor in Maryland. We were founded in Baltimore City in 1878, and the same Falter family still owns and operates the company today. We fear that the long-term future of the company and the 170-plus families we employ are in jeopardy with the continued tax attacks on the state of Maryland is forcing on us. I'm here today to testify against House Bill 1554. This is another way that Maryland is hurting us as a distributor and our retailers we deliver to. This is going to hurt every business as people, the higher costs, and people will have less money to spend. People are struggling, living paycheck to paycheck. Each new tax makes it harder and harder to live in Maryland. Each new tax puts us one step closer to laying off employees. We as residents of Maryland must make tough decisions on what is necessary in our life based on the amount of money we must live on. It's time you balance the budget by taking a long, hard look at how our tax dollars are being spent before you take more money from the people who live in Maryland. We are not your ATM machine. The use it or lose it budgets for municipalities might be a good place to start. The wasteful spending of our tax dollars is destroying Maryland. And I'll end with this. I'm born and raised in Maryland, and today I turned 53. After building a life here, raising my two boys, owning a business for 20 years, I'm likely to be forced to move to another state due to the high cost of living that keeps going up and up. Stop the tax attacks on the people who live in Maryland. I ask you to vote against House Bill 1554. Thank you.
Thank you. Delegate Buckle.
Chair, a couple questions. Thank you. The gentleman from Mr. Falter at the end, thank you for coming in today. I know it's difficult to say those things or to think those things, but Mr. Greenfield, with the Multifamily Housing Association, year after year, at least the last several years, we've heard from the governor and a wide variety of interested legislators, which I commend, that we need more housing. We need, whether it's more single-family housing or more what your industry does, more construction of apartment housing, rental housing, condos to own. You know, we just need more housing because our housing costs so darn much that we just don't build enough to keep up with demand for a variety of reasons. Do you think that the increase of costs from this bill and bills like this will have an impact upon investment, impeding investment in your sector for your members and new folks who want to come in, that want to take these big risks, big mortgages, big loans to come out and develop these properties?
Absolutely. I mean, if you look at the state of our industry, we have bared a significant brunt, whether it was a filing fee surcharge that went up 435% last session, or it's BEPS, or it's any number of costs associated with doing business as a rental housing provider. And you're seeing the data prove that currently. You have rent control in Prince George's County and Montgomery County, which has clearly reflected a significant downturn in transfer taxes, which hurt their bottom line. And coincidental to that, you see 155% increase in Northern Virginia's development around multifamily purposes. We are becoming a flyover jurisdiction for investment.
Sometimes the law of unintended consequences is iron and absolute, and it works these policies. People think it's just going to be okay, it will generate revenue, but all these unintended consequences, sometimes we get less revenue and less economic activity. My final question to the panel, Mr. Campion, the trucking industry, what we've seen over the years is because trucking and transportation affects almost every sector of the economy, because unless you're getting your goods, unless you live right on the water and you're getting your goods shipped to you with a ship and loading them into your house, almost everything we have at one point in time was on a truck, some for a truck or rail, some mass things, bulk materials go on rail. the trucking industry in Maryland, do you have any sense or feedback of if you add to our costs 2.5, 3% across the board, you're decreasing the repair services, or you're either decreasing the activity, shipping it out of state, or you're increasing the costs? Do you think that's things that will be passed along ultimately to consumers and sort of have that cascade effect throughout the economy?
No, it has to, Delegate, so thanks for the question, because we can't absorb that cost, but you've already mentioned sort of the regional competitiveness aspect of it too. Look, there's nothing more regional than trucking, right? Because everything we have is mobile, so it's pretty easy. The port collapse last year, the bridge collapse is a great example of that, where all of a sudden we saw a tremendous amount of freight that was coming into Baltimore, now in Virginia. Those same carriers down in Virginia, Virginia worked with us to be able to go down and pick up freight that was originally destined for Baltimore. But guess what? Now those Virginia carriers, they're trying to peel off that freight because it's such a competitive industry, and we're so easily mobile because we're all on wheels.
Right. So your short-term costs go up a handful of percent, your competitors don't. All of a sudden we have Virginia, Pennsylvania companies with their employees, and they're running long-term or long-haul truckers to come into Baltimore and take it to Ohio,
regional
take it to Illinois.
Regional haul. It's not even long haul. It's regional haul. So,
thank you.
Yes, sir.
Thank you, Madam Chair. And just very briefly, and this is really directed towards the Lodge Association, but anybody who owns commercial property. So we're obviously facing the impact of this bill, and there's also a bill moving through the House that would allow counties and Baltimore City to raise a special rate for commercial property. Could you talk about the net effect of those two bills combined, how it would impact your business, especially the Lodging Association?
Thank you, Delegate, for the question. We are very much concerned about multiple bills currently in front of you. There's a 2% Baltimore City sales tax potential that we have asked for an exemption for hotels from, because we already have the hotel tax that also applies 9.5% in Baltimore City. So the total tax rate in Baltimore City in particular could be over 20% on hotels, and that absolutely hurts our competitiveness. And in addition to that, there is a 1% surcharge to fund transportation, which hotels would be captured by, and that is a regional bill that's affecting Baltimore City, the capital region, the southern region. And we are hearing from members who have seen government travel essentially dry up. Meetings are being canceled. The international travel also seems to have disappeared. Our members are very, very concerned and are bracing themselves for some severe impacts.
And that's a great point. I think I read today that hotels in the area have seen a 50% decrease in stays because of some of the decisions out of Washington. So compound that with an additional commercial property tax in this bill. How do some of you guys survive?
Some of them aren't surviving. I mean, there are hotels that are on the brink of closure, and we have seen hotels that are closing because the numbers no longer make sense to operate as a hotel, and so they're being converted into other uses.
Thank you. Thank you, Madam Chair.
Thank you, Madam Chair. Clark Computing is also a staple in my county, and I know we have a small business. I know many small businesses operate at very thin margins, and what you do profit, usually especially small business, you are either putting that back into the people or back into grow the company or to provide better services for the community, or to give it back into the community itself. So if the intent of the legislation is to fix some of the problems that you also as a small business are dealing with, either from the federal level or from the state level, how do you adjust for $1 million that you weren't expecting when you were doing all your forecasts? Like, what is going to be then the impact on Clark?
It's going to have a large impact. So my only two choices is either three choices: absorb the cost, which no business person in their right mind is going to absorb this amount of cost. They're going to pass it on. I heard statements in there that some of us may, some of us won't. 99% are going to do it. It's a fact. I mean, you can't absorb that type of cost. So I'm not going to absorb the cost. I'm either going to pass it on to my clients, who's going to pass it on to their clients, and so forth, or I'm going to have to terminate employees. You know, I don't have other options. And so, you know, this has put us into a pickle, you know, that, you know, I've grown this business over 20 years. And between 20 and 30 years, it's your business in jeopardy. You think that you've made it 20 years, that you're safe, but you're not, because if you don't keep growing, you die. And so this is going to stifle growth, and it's going to have to make me look hard at what I'm going to do with my business. I'm 56. I could shut it down and retire. You know, I've got options in front of me. And if I do that, I've got 40 employees that are going to be affected, 40 employees that are citizens of Maryland that I pay a good price to already, but they're struggling. I've given every employee that works for me 2 raises in the last 2 years that were significant, and they're still struggling. They're struggling because they tell me about it, because they keep coming to me explaining how much they're struggling. And when you do this to businesses, the consumer or the citizens of Maryland, they're going to pay the price, and they're already struggling. It does not make sense to me to do this, especially at this time when we have so much chaos at the federal level. I'm a moderate Democrat, but I got to tell you, every Democrat here that's supporting this, you're hurting people. I don't understand why you're screaming about tariffs being implemented at the federal level, but you're okay with this. It makes no sense.
Thank you. Thank you for being here.
Okay, are there any other questions from the committee? Okay, thank you very much for being here.
Thank you, Madam Chair.
Next, Lori Graff. Javante Hawkins. Mike O'Halloran. Gregory Morgan. Steve Navarro. James Randisi. I think that's 5. Committee, just so you know, once we hear from all those folks that are in person, we do have a good amount of virtual witnesses, okay? So we'll see, just so you know. Can we start with you, ma'am, and we'll just work our way down?
Sure. Good afternoon, Chair Atterbury and committee members. I am Giavante Hawkins. I am the Executive Director of the Maryland Society of Accounting and Tax Professionals. We serve over 2,000 tax and accounting professionals who assist more than 700,000 Maryland residents and small businesses. We strongly oppose House Bill 1554 for 3 critical reasons. The first, I won't go into too much detail. You've heard from many CPAs today. It will be administrative chaos. The second, this bill raises significant legal concerns about state taxation of federal tax return preparation. Federal law mandates compliance with federal taxes, and imposing a state sales tax on these services may conflict with the supremacy clause and principles of federal preemption. The administrative burden of separating taxable and non-taxable service creates an additional compliance headache for tax practitioners in Maryland. Third, this legislation creates an unequal tax environment. While accounting services under the NICS Code 5412 are targeted, legal services under Code 5411 are exempt. This would tax approximately 190,000 accounting businesses while exempting 360,000 legal service businesses. It's an unreasonable disparity. This tax would likely decrease compliance with existing tax laws, drive business to neighboring states, and burden Maryland's accounting professionals. We respectfully urge an unfavorable report on House Bill 1554. Thank you.
Good afternoon, Madam Chair, committee members. My name is Steve Navarro. I'm the president and owner of a small technology consulting firm called Mind Over Machines in Baltimore County. As mentioned earlier, you've heard how small businesses operate on small margins. We operate differently than product companies because in the product business model, you build it once and you sell it many times. In the services industry, our commodity are our humans, our workforce. So as we strive to build our businesses, we are increasing our revenues, but we are also increasing our headcount to provide those services. We give back significantly to the business community and the community at large. For example, we have developed AI curriculum for Baltimore County Public Schools. We are working heavily with Howard Community College, Towson University, University of Maryland to upskill the workforce around and prepare them for artificial intelligence. A gentleman earlier mentioned AI agents. It's real. Our mission is to help upskill and prepare the workforce and the companies to adopt it responsibly. And here's what's going to happen. If you impose this bill, you are going to force employers to replace their humans with artificial intelligence. I implore you, please do not pass this bill. We are opposed to Bill 1554. Thank you.
Good afternoon, Madam Chair, members of the committee. My name is Lori Graff. I'm CEO of the Maryland Building Industry Association. I know it's been mentioned a few times. We do appreciate the attempt to exclude housing from this bill. I'm not going to talk about the housing shortage. You guys are very well aware of that. I've been asked a few times, what does this do to housing? The answer is we don't really know. There's a lot of things in here. I do want to note that according to our National Association of Home Builders, for every $1,000 you increase the cost of housing, you place 1,524 Marylanders out of that house. That's significant. As we start to make housing more expensive, it becomes out of reach of so many different Marylanders. I was able to sit down with a few of our members to talk about this and what the impact may be. We did do a few case studies. And while there is certainly a lot of things that are housing related that are not in here, there's a lot that is in here. We do obviously operate businesses, so all of the general business things are certainly a concern. But there is things such as landscape planning, environmental consulting, traffic consultants, photography, regular landscaping, and other things that directly affect the cost of housing. We did do a case study on a few small projects, infill projects. I found one that would probably about $1,200 increase that price of that house. We found another that was about $2,400, so it kind of is a little bit on the spectrum of those types of things. We also did talk to some multifamily, and we had similar numbers to the $20 a square foot. Apartment. Thank you. With respect, we'd ask for an unfavorable report. Thank you.
Good afternoon, Madam Chair, esteemed members of the committee. For the record, my name is Greg Morgan. I'm here today on behalf of the Maryland Society of Professional Engineers to formally express our opposition to House Bill 1554. In Maryland, there are 22,428 licensed professional engineers. While we certainly understand the fiscal challenges our state is facing, we feel that this bill will further justify the feeling of many of us in Maryland business community that Maryland is not a business-friendly state. The implementation of this tax will create huge burden on businesses of all sizes. Any business that is subject to this tax will need to create new systems for collecting and paying the taxes, and firms with many providers, many employees, may have to add staff to manage the process, thus burdening the business with an increase in expenses. Oftentimes, a taxable service provider will have been taxed by other providers on a select project multiple times, and will continue over and over for any consultant engaged in that project. Also, the bill in referencing multiple NAICS codes, while not specifically identifying all service businesses under a particular category, allows for more broad interpretation and inclusion of many other service businesses, including engineering. So we're really not sure what is included. As we all know, any tax on a business is ultimately paid by the consumer, thus making it increasingly more expensive to live and do business in the state of Maryland. For these reasons, we respectfully request an unfavorable report for House Bill 1554. Thank you.
My name is James Randisi. I'm president of Randisi & Associates, Inc., and we reside in Towson, Maryland. Thank you for the opportunity to talk. I'm testifying unfavorable to HB 1554. This legislation will be an administrative burden for my business, such as paying for tax professionals, resources to properly advise on details, collecting, reporting, and remitting taxes. And earlier, as you know, the comptroller admitted to having to hire 3 people and buy additional software. This legislation will put my business located in Maryland at a disadvantage. My firm competes with other firms not having to pass along this similar type of tax, raise the cost to my firm, lower my revenue when we lose business, and lowers tax revenue paid to Maryland. And by way of example, you all have to campaign for a re-election. Assume that there was a law that added an additional tax cost on your campaign that was not added to your competitor's campaign. Not fair, right? But you're doing the same thing to businesses in Maryland. Thank you for this opportunity.
Thank you. Committee, are there any questions? Delegate Griffith?
Thank you, Madam Chair. Thanks for being here. And this is for Ms. Graff. This is a very brief question. You were talking about the impact on multifamily and per unit, and talking about how you said that, you know, for every $1,000 house price goes up, it takes over 1,000 people out of the housing market. Can you just expand a little bit on that, please?
Sure, absolutely. So obviously this is for sale. This piece of it is the $1,000, for every $1,000 you increase the cost of housing, you are taking 1,524 Marylanders out of that house. So $400,000 house, you make it a $401,000 house, you're pricing another 1,500 Marylanders out of being able to purchase that house.
And you said this, in some instances, this would add $2,400, $2,500 per home, so.
Correct. And there's many different things depending on the site, but yes.
Thank you. Thank you, Madam Chair.
Any other questions? Okay, thank you all for being here. Next, Lauren Pearl. O'Halloran, yep, come on up. Savidra Scott. Stefan Popescu. Stephanie Helsing. Chris Parts. Chris Parts. Okay, we'll start with you. Yeah.
Good afternoon, Madam Chair, members of the House Ways and Means Committee. For the record, my name is Mike O'Halloran. I'm here today representing NFIB in Maryland. Here, look, for those of you that remember last year's bill, the good news about this year's bill is that the balloon animal sculptor is spared on this for charging for his services. However, he's now going to have to pay other vendors because of this bill. Vendors like his accountant, vendors like his web designer, his photographer. And to keep on the subject, you know, you've heard a lot about layering. You know, it's easy to look at this bill and determine, well, it's just 2.5%, but as you heard from other small business owners, that it's not just 2.5% here, it's 2.5% there, it's 2.5% over there. All of a sudden, you're talking 7.5, 10, 12.5 percentage points difference in what they make and what they then are more than likely having to charge their customers and clients. And it goes without saying, this will have an outsized impact on small businesses. Like you've heard from those that have come before me, the reason is they are very reliant on others for these services. Frankly, they just don't have the resources in-house to do these sorts of things. So at the end of the day, they are not only going to be collecting fees, but a majority of them are more than likely having to pay out instead of just collect and remit it, which obviously has its own difficulties. You know, there are other impacts that were discussed today, and I'll leave you with this. You know, the idea of long-term contracts that have already been settled, multiple years out. How are they going to make up for this? They can't go back to those contracts and say, hey, I need to charge you another 2.5%. They're going to have to eat those costs, and we are very concerned about that. We appreciate your time and consideration.
Good afternoon, Chair and members of the committee. My name is Savidra Scott, and I am a CPA practicing in the state of Maryland. I appreciate the opportunity to speak today in strong opposition to the Bill 1554. As a sole proprietor, I work directly with small businesses and nonprofit organizations, many of which are already struggling to keep up with rising costs and economic uncertainty. Extending the sales tax to professional services would place an unnecessary burden on businesses that rely on accounting and financial guidance to remain compliant and make informed decisions. Unlike large corporations with in-house accounting, small businesses depend on outside professionals. Taking these essential services is effectively penalizing small businesses for doing things the right way. Would you rather that they attempt to do the work themselves and create a bigger burden on the state to try and fix in order to save money? DIY accounting is a bad idea. Adding an additional tax on necessary services only exacerbates the problem, discouraging investment and making it harder for small businesses to survive and let alone grow. This proposed tax also ignores the economic reality in Maryland, particularly in regions close to DC with ongoing federal layoffs and spending reductions. Many local businesses are expecting a downturn. For these reasons, I strongly urge the committee to issue an unfavorable report on House Bill 1554 because Maryland should focus on policies that support small businesses, not hinder them. Thank you.
Hello, Madam Chair and members of the committee. I'm Lauren Pearl, the Vice President of Tax at Under Armour. As a large Maryland headquartered company, proud Maryland headquartered company, we express opposition to House Bill 1554. This bill would create a tax on a wide range of essential business services, including our significant investments in marketing and technology, which are required for us to be competitive in our industry. We believe that this will create long-term problems for Maryland's economy. First, this bill will have a disproportionate impact on businesses headquartered in Maryland. You've heard many people speak about this. By taxing services in this bill, including services performed outside of Maryland, Maryland will tax the majority of the spend of Maryland headquartered companies. We employ thousands in high-paying Maryland headquartered jobs, and we will be immediately financially disadvantaged compared to our competitors and some of those who are already doing business in the state but not located here as a result of us choosing Maryland. Further, this bill will create a competitive disadvantage in the region. While people have spoken about there being service taxes in Virginia, Pennsylvania, and Delaware, none of these states tax these services that are in this bill or don't tax them in any large majority on marketing, IT, accounting. If anyone actually thinks that's correct, please fact check them. This bill will encourage Maryland-based businesses to relocate, decreasing collection of corporate, individual income tax, and sales on goods. Please don't limit growth in Maryland. Please don't have headquartered companies invest outside of Maryland. Thank you.
Good afternoon, Madam Chair. I'm Chris Parts with AIA Maryland, representing over 2,000 architects across the state here in opposition to House Bill 1554. Nearly 95% of our members are firms of less than 50 people, and our president is an architect resident in Hagerstown, Maryland, with a firm of about 5 people there. Between the many consultants we contract with to complete our projects, and most members needing a contract for services for managing and marketing, this is a large burden. I want to share 3 simple points. In a state where where we pay a significant amount of taxes, the Maryland climate of public procurement does little to advance opportunities for architects. If you take a look at the public procurement for University of Maryland projects and increasingly public schools, many of those projects are being awarded to out-of-state firms while the jurisdictions and adjacent jurisdictions preclude us from winning work elsewhere. Secondly, Maryland is a small state. Increasing these taxes makes us less cost competitive because we need to work regionally. While as architects we're not directly taxed, this puts us in a position of adding the tax to either pass it on to owners or recognize that we won't be cost competitive if we're working elsewhere and we need to absorb some of those taxes ourselves. And finally, this tax forces our members to invest less time in making better and more efficient places to live, work, and play, and more time spent on tax and accounting compliance. In our eyes, this does less to build business and add revenue to Maryland, but adds another burden to a profession that is recognizing diminished investment by our state for our services we provide. Thank you.
Good afternoon. My name is Stephanie Helsing, and I'm the president and CEO of the Greater Silver Spring Chamber of Commerce. And while we enjoy a more than cordial relationship with Delegate Moon, we are submitting these comments in strong opposition to House Bill 1554. The primary burden of this tax will fall on small and mid-sized businesses who tend to outsource services, operate on tight margins, and cannot easily absorb additional costs. Increasing their expenses could stifle their growth, hinder job creation, and harm Maryland's economic health. It should be noted that while we are located in Montgomery County, 90% of the businesses in my chamber are small businesses in a minority-majority equity-focused area, and the chamber worries that their needs have been overlooked. We are still trying to recover from COVID in some cases. We want all businesses to succeed, and for these reasons, the Greater Silver Spring Chamber of Commerce respectfully requests an unfavorable report for HB 1554. It is the Chamber's position that this legislation will have an egregiously negative impact on small businesses, particularly businesses in Silver Spring. Thank you for your opportunity to share our opinion.
Thank you. Okay, questions, Delegate Miller.
Thank you, Madam Chair, and I'll try to be quick with this. Mr. Halloran, you said something about, like, a lot of these services are already under contract for businesses, and they have to pay a set rate, and with this going into effect in the middle of the year, perhaps not on the annual basis, so then those costs would have to be absorbed. You can't change a contract mid-level. Am I understanding that kind of
That's correct.
impact?
In fact, yes, Delegate, that's correct, and thank you for the question. You know, the fact is, I had a member call me. She has an environmental consulting business, has done work at BWI, has done work downtown in Columbia, and she called me with that expressed concern. In fact, she was informed by an attorney, no, the way this bill is structured right now in its current posture, you're going to be on the hook for charging that 2.5%. You know, it's up to you on how you can renegotiate that with your client, but the fact is you're ultimately you'll be on the hook. She's telling me that's upwards of $50,000.
Oh, thank you. And that was an environmental firm?
Correct.
Thank you. And then, Ms. Pearl, we've heard a lot from the small businesses, and I obviously completely understand. I would like to hear, we heard from Northrop Grumman. I would like to hear a little bit, because, you know, for my son, that's a dream job, to work at Under Armour, right?
Mine too.
Yeah, yeah. So that's a dream job for him. And so with you saying it being a disproportionate impact on Maryland businesses and how they chose to be here, could you talk just a little bit more about that and what that would mean to us as a state?
Absolutely. So this bill would tax, as I mentioned, the majority of our expenditures. We spend significantly in IT, significantly in marketing, you know, not as much in accounting and other things, but those things that we will then have to pay this tax on, our major competitors do not. And also this bill, when we say disproportionately for Maryland-based companies, you know, again, if another company is based in Portland, for example, you know, they're not going to have to pay all of those services. So right there, they've got 2.5% of their cost base that they don't have to pass on in prices to their consumer,
right,
or don't have to find elsewhere in their cost base. We want to grow here in Maryland. We don't want to have to reevaluate, but, you know, again, we're mid-year. This goes into effect very quickly.
Right.
We're going to have to make tough choices. Do we pull back on investments we were going to make here in Maryland? Do we pull back on planned hiring? Those are the real choices we're going to have to make.
Just what is the scope of putting something like that in that quick? Because we talked about the administrative chaos at a small level. I can't imagine the amplification on a large level like that.
Well, right off the bat, we expect those who are large corporations, all of our vendors, to do it properly initially, right? Those, you know, the Microsofts of the world will do it properly first. They'll charge on everything, right? So even if this bill is trying to tax a few things of IT services, they will tax everything to cover their you-know-what. And we would do the same thing. It makes sense, right? You'll charge to make sure that when the state audits you, you won't have to pay it out yourself. The bigger concern is the vendors that are smaller, right? Mm-hmm. We use lots of minority-owned businesses. We use businesses across the state, across the country, and they will now, as most states do not tax services, they now need to get all of their billing software updated to charge this tax. That's not going to happen by July 1st, which means that all of those companies are then going to have to update their billing software, then go and do back billing, attempt to collect that. And that's going to be a burden for out-of-state and in-state, right?
And out-of-state's not expecting this. I mean, that's not even on their radar.
And yet, while Maryland companies, service companies have a heads up on this, that doesn't mean that it's going to be easy to adapt service software that doesn't already have a sales tax component.
Okay. Oh, thank you for that. That's another perspective I hadn't thought of. Thank you very much.
Any other questions? Okay, thank you very much for being here.
Thank you, Madam Chair.
Sarah Price. Natasha Nazareth. Melissa Wade. Christine Walters. Stephen Rinaldi. Andrew Griffin. Robert Wade. Okay, someone was a little slow, so someone's gonna have to wait. Okay, we'll just start with you, sir.
Good afternoon, members of the House Ways and Means Committee. Thank you very much for having me here today. I represent the Maryland State Bar Association. I've had my own law firm in Bethesda, District 16, since 2005. I am a business attorney. My practice focuses on all types of business agreements, acquisitions, private offerings of securities, franchising, etc. About 60% of my clients are women, minorities, and first-generation Americans. And my clients come from Anne Arundel County, Baltimore City, Baltimore County, and Howard County primarily. I'm also a resident of District 16. MSBA opposes HB 1554 strongly. Why is that? It doesn't specifically say legal services, so why do we strongly oppose it? Well, most solo and small firms use an independent contractor accountant, bookkeeper, tax prep, or payroll services. I've got to add that 2.5% onto my hourly fee. Litigators need to get their briefs printed and bound in appellate courts. Now they've got to add another 2.5% onto the client's fees for binding and charging it. But lawyers aren't very good at marketing. We almost all outsource our advertising, our website, et cetera. Well, that's another 2.5% right there. If you do zoning services, that could be government relations. Now you got to tack 2.5% onto your entire charge. Thank you very much for having me here today. My name is Stephen Rinaldi.
Good afternoon, Madam Chair. My name is Natasha Nazareth. I am also here speaking in opposition on behalf of the Maryland State Bar Association, and lucky to follow my colleague. I live in District 17 and own a small firm also in District 17. I serve clients in all districts represented by committee members here except for Allegheny County and Harford and Wicomico counties. I'm a business attorney. I primarily serve small to mid-market businesses. 86% of my clients are purpose-driven businesses and underserved entrepreneurs. The majority of MSBA attorneys work in small firms of fewer than 5 attorneys. So all of the testimony you've heard today affects the MSBA members. But what I would like to highlight for you today is the effect that this bill has downstream on other businesses and on individuals who consume legal services. I want to give you a very specific example regarding tax permitting. Tax permitting is when the same service or same item is taxed repeatedly over the course of its journey to the consumer. In the legal context, we all expect that a business may have a fair day in court, and this bill will prevent us from doing that. I want to close. There'll be impacts on pro bono representation and legal service providers. I thank you for hearing our testimony today and ask that you oppose this bill. Thank you.
Good afternoon, Madams Chair and Vice Chair and honorable committee members. Sarah Price on behalf of the Maryland Retailers Alliance in strong opposition to the proposal before you today. You know that this tax structure would be unique. You know that it would dramatically increase costs for businesses, and you know that it would have a negative impact on Maryland's business environment. Leadership in Annapolis has repeatedly stressed the importance of growing the economy and supporting the business community this year, but it seems like almost, if not every revenue-generating proposal that would have had a meaningful impact on the budget deficit would lean almost exclusively on the business community or on our customers during their direct interactions with us. This is not how you grow the economy. State and local governments cannot attract businesses or incentivize growth by continuing down the path of anti-business policies every year. We have a responsibility to our members to consider every bill within the context of not only everything that has passed already, but also every bill that is on the table right now. And this session in particular seems fixated on increasing costs and administrative burdens on the business community as the only way to pay for the state's unfunded mandates. Everyone benefits from the services that are funded by taxes, but the business community cannot take on the burden of paying for that alone. So we would urge an unfavorable report. Thank you.
Thank you, Honorable Chair and committee members. My name is Christine Walters. I am a sole proprietor and human resources and employment law consultant. Now, in addition to other fiscal challenges many of us face, this bill would require me to figure out which of my clients are operating under one of the NAICS codes, charge those clients the additional 2.5%, then be subject to the same tax as a recipient for covered services, collect those taxes, send them to the state, and I suspect with some type of itemized accounting. I ask you to please not impose this administrative burden on me and so many of your constituents. Since I started my practice 22 years ago, I've increased my hourly rate just 3 times in 22 years. When my expenses increased, my first response is not to pass that on to my clients to generate more revenue. It's not even my second response. I assess where I can decrease expenses, and I do so, and I respectfully ask and expect my state to do the same. I also have some technical questions, more in my written testimony. One, for example, is if a business operates under more than one NAICS code, if one is covered under the bill and one is not, how does the business determine if it's covered? Does it operate if it is 50% or more of its overall business operations or just 1%? Same on the flip side, whether I charge the tax or am charged. For these reasons and more, I respectfully request an unfavorable report. Thank you.
Good afternoon. My name is Melissa Wade. I live in Annapolis. I was born and raised here in Maryland, and I opened up I opened up a hardware store nearly 25 years ago. I am a member of the Ace Hardware Co-op. It is a co-op, not a franchise. So again, that means that I am totally independent. So also known as a mom and pop business, also known as a brick and mortar. I am deeply afraid for my future here in Maryland with my business, as Maryland continues to pass these costly anti-business policies and mandates that are increasing our taxes. And most recently, you know, the sick leave, minimum wage increases, the upcoming Family Medical Leave Act, retirement, it goes on. Also, you know, with other increases that we have now with energy and supply chain issues. You know, I'm fortunate that I'm a member of an organization that, you know, keeps me informed and lets me know of upcoming, you know, bills that may come into play. They're not current, but are upcoming. In those that would also affect me are the proposed delivery tax that will be the highest in the country, the sugar tax, the container deposit. Oops, I ran out of time. Sorry. Okay. It terrifies me looking forward at my future, you know, here. It's being a brick and mortar. I can't pick up and move to another state. I'm stuck here, and I have a lot of long-term employees that have been with me for nearly 20 years that, You know, I have no problem giving them these additional benefits and additional money, but I'm still worried about their future as well.
Thank you.
Thank you.
Any questions, committee? Okay, thank you all very much for being here. Andrew Griffith?
Are we done? Okay.
What's your name? Last name, I'm sorry. Level, okay, I'll look while I call it this next panel. Andrew Griffith, Robert Wade, Sandy Patel, David Carberry, Bridget Sloan, Nick Manis, and sir, if we just start with you. To my right, we start with you, yep.
Can you hear me? First off, I want to thank you for your service to we the people of the state of Maryland. I have 2 comments and 1 suggestion today. And these are just reflecting what I, as a small business owner, are impacted with. My name, by the way, is Robert Wade. I own Made Healthy. I'm a veteran-owned business. I have an office here in Annapolis, a satellite office in Cambridge, Maryland, and I share a distribution office, or a warehouse, should I say, with one of my larger vacation rental companies. So my first comment, on behalf of the small businesses who use unskilled labor, I want you to see what we're up against in the state of Maryland. My company has been increasing our costs to offset the minimum wage increases as well as other inflationary increases for the past few years. Keep in mind that most of us have been paying way over minimum wage. We must compete with companies like Dunkin' Donuts in Denton, Maryland, who pay $20 an hour to start the same unskilled labor we're seeking. Just last month, I had a customer who has been with my company for over 14 years. She's referred us to several other customers. Her husband told her that even though she may love our service, they can no longer afford to have their house cleaned. Everything's going up except their fixed income. I do also do a lot of work with retired people and the Department of Aging. Even though my company has grown, my residential cleaning side of business, am I out of time? Okay, I'll finish this last thought. Even though my company has grown, my residential cleaning side of my business has decreased in the last 4 years. I have had 6 crews cleaning houses. I send out maybe 2.5 crews on average now. I've watched several of my competitors go from 12 crews to 4 crews, and some just closed their doors. All this is related to costs continuing to increase from every direction. This 2.5% tax will just exacerbate our challenge.
Robert Wade. Good afternoon, Madam Chair. Thank you for this opportunity. I am Sandeep Patel, and I'm the CEO of Crossroads Hospitality. We established our company in 1993, and we have 8 hotels across Maryland, and including Holiday Inn Express in a small town, La Plata, Maryland, which employs 24 team members. This bill for our 8 hotels, we're estimating it's going to cost us approximately $350,000 annually. Hotel industry, like my other friend says, profit margins are very, ranges from 4 to 6% in a good year. This tax is going to eliminate quite a bit of our extra money that we would invest in our infrastructures to improve our property for a better guest service. But I want to tell you some small story. So I moved when I was age of 22 to Waldorf, Maryland, when my family first purchased their hotel in Waldorf. And we started with about 5 employees. And over the times, we grew to 18 hotels in the state of Maryland. We liked Maryland. We came here to build our American dream, since I am a first-generation hotelier. And today, throughout all of these COVID restriction businesses and this tax imposed every year, from a minimum wage to this, all these other taxes, we have reached, by 18, we have dropped our hotels down to 8. And we have a lot of investors, our family, and we're considering now to move to another state. Literally move to another state, and I strongly oppose, and please keep me, we love Maryland. My children are in school here. I've been here 33 years. I do not want to move, but please, I strongly oppose this bill.
Thank you. Thank you, Madam Chair and members of the committee. My name is Bridget Sloan. I'm the general manager of the Sonesta Select Columbia, also representing a total of 5 hotels that are run by Sonesta Corporation. Hotels utilize multiple services. It's one of the top operating expenses in our profit and loss statements. IT property management systems to facilitate secure check-ins and check-outs, manage guest information, execute secure payment processes. Hotels employ loyalty program services, accounting services, marketing services, legal services, payroll services, pool services, pest control services, all of which will be incurred another 2.5% tax. Maryland hotels run through a seasonal cycle. Many months, December, January, February, operate on a negative GOP. Our profit margins are slim. Cost of labor has gone up, and many other negative influences on our bottom line have been implemented. Taxes on service necessary to run business will add to these losses. Maryland hotels are saturated in government segment business. Government rates have set per diems. Department of Defense has static rates that are often lower than per diem at $80. These static rates cannot be levied to adjust for business to business tax increases. Thank you for your time. We strongly oppose.
Thank you, Madam Chairman, members of the committee. My name is Nick Manis, here in opposition to House Bill 1554, representing the Maryland Beer Wholesalers. The Maryland Beer Wholesalers is made up of 22 majority family-owned businesses, and our members are responsible for delivering malt beverages across Maryland, ensuring product quality, consumer safety, and regulatory compliance. This bill would not only increase costs for beer distributors, but would also create a ripple effect that harms Maryland consumers, small businesses, and the state economy. Beer wholesalers operate in a highly regulated and high-cost industry where profit margins are already tight due to a 9% state sales tax, federal excise tax, state excise tax, rising fuel, utility, and labor costs, which we cannot control. And we also have to maintain 24/7, 365 climate control warehouses to ensure product quality and compliance with state and federal regulations. This proposal would have far-reaching consequences. We're susceptible to many of the codes, accounting fees, which is one I don't understand because we have to, of course, pay taxes, but now we're going to have to pay a tax to an accountant to tell us how much tax we owe. Marketing and advertising, heavy truck repair, HVAC repair, hydraulic equipment, repair on materials such as forklifts. This would not just affect wholesalers, it would drive up costs on retailers, bars, and restaurants. For those reasons, we oppose House Bill 1554. Thank you, Madam Chair.
Good afternoon, Madam Chair, members of the committee. For the record, my name is Andrew Griffin, excuse me, here on behalf of the Howard County Chamber of Commerce in respectful opposition. I'm not going to belabor a lot of the points that have already been made about impacts to small businesses. Howard County uniquely represents a full suite of industries of all sizes, businesses of all sizes. As you imagine, we've heard from them all. Howard County has uniquely positioned itself to try to take advantage of, the governor's economic development plan. It wants to be a place to locate high-tech, IT, and cyber jobs. Before the introduction of this bill, a handful of weeks ago, many of you probably saw it, an anchor employer in Columbia, headquartered in Columbia, one of the state's largest AI developers, Big Bear AI, announced the relocation of its headquarters from Columbia, Maryland, excuse me, to Northern Virginia. That takes almost 500 jobs out of Columbia to Northern Virginia. That's before the introduction of this bill. They cited a variety of reasons for Sure, one of them is the inability to long-term plan because of the state's business climate, unstable business climate. And so with that, I would just urge the committee, a leg of our stool is being taken out from under us, no questions asked with federal employment. We have to grow the other leg to support the state, not hit it harder. Appreciate your time.
Any questions? Delegate Miracle North?
Thank you, Madam Chair. To the gentleman, I forgot your name, I apologize, in the gray suit.
Sandy Patel.
Sandy, okay, thank you. You mentioned you have kids in school. Do they go to public school?
They go to public school, Charles County, McDonough High School. I had 2 daughters that have been through that. One went to UMBC.
Okay.
And I live in Charles County in La Plata. I have a hotel in La Plata, I have a hotel in Waldorf, Prince Frederick, Aberdeen, Elkridge. But we had Chestertown, we had all of Annapolis, we had all of them, but we ended up having to sell because it's just too much burden.
Well, I was just asking about your children, respectfully.
But I just want to
You've got a lot going on. I'm proud of you for that. So you're aware this bill is actually going towards enhancing our education public school system, correct?
Yes, I do understand that.
Okay. I was just a little confused because you said you wanted to move, but this bill is actually helping the education system that your kids go to. So I just wanted to understand that because you're the only person that actually kind of speaks to what I'm thinking about all that.
There's just not enough time. One more other thing.
Sure.
So, when we go through a cycle of renovation in hotels, like I'm going to do one in Elkridge next year, I'm going to have over $1 million renovation cost and probably $500,000 in labor. That's going to be contracted out. And that contract, I'm going to have to add another 2.5% to that because that contract he's going to charge me. So a lot of these other points in our, the minimum wage, all of these other things, just even minimum wage increased $70,000 payroll for one of my hotels just because that's how it is. And then this, I'm estimating another $35,000. So $100,000, the rates are stagnant. The government, just this week, I'm looking at all my hotels report. Typically in March right now, we would be in full swing in government. DC is busy as you can get. We're 100%. Most of my hotel, Hilton Hamptons, Holiday Inn Expresses are at 50%. So not only we're going to be hit with this government impact from the federal government because all our hotels are near the bases or everywhere, we're going to have a major impact. I do not want to take any education funds away from our kids. Education is where my parents believed in when we came from India, educated us to be where we are. Okay, education is the base of our culture and my family culture. So I don't want to take that away from anybody. But if my hotel goes down and then we have to, for example, if we don't met the debt coverage, with my other fellow said that, the bank's going to take the hotel, is going to re-auction that hotel at a lower price, and then tax assessment for my hotel will be less, and then all of the other hotel taxes. So we're going to impact the real estate property tax that the state of Maryland collects. And if we are getting to that point, during COVID, we had help from the government. Right now, I don't think government is in position to help our industry. I understand we have to survive, balance, do something, but we're targeted now. We're not an ATM machine. We keep coming after minimum wage, all of this. We are not ATM machine. We have a choice, we'll go somewhere else. And just for example, our company invested 2 new hotels in West Virginia last year. We moved our money from here, we made money from here, and we had to invest somewhere else. It's that much of a burden. Like I said, one hotel, give you an example, my Comfort Suite in Elkridge, we average 1,000 hours every 2 weeks. The minimum wage cost us almost $2,200 every 2 weeks, times 26 paychecks. Multiply that, and my business was the same as 2023 to 2024. Where am I going to get the money? I'm going to be most likely my loan's going to call because my debt coverage is going to be 1.35, and I don't think I'm going to make it.
Delegate Miller.
Thank you, Madam Chair. And as mentioned, a lot of this funding is going to education, and a big piece of that is college and career readiness. So that's for any of you to answer. So as we're educating our future workforce, I would like them to be able to have jobs to go to, especially to be able to stay in Maryland as my kids grow and have kids. And I would like them to be either able to come back to Maryland or to stay in Maryland. So we're kind of, seems to be at a cross purposes with a tax like that might drive businesses out of the state that is going to employ that future workforce. So if any one of you would like to comment on that aspect of the education piece, and we ask, even in the blueprint, we ask a lot of our businesses and private providers, but it's basically we're preparing them for future work. So if any of you wanted to comment on that, on what the impact would be. If not, I'll just say, isn't that so?
I would just say, from the perspective of the Howard County Chamber, we would agree to that. In the example I used, listen, those jobs that are moving are high-skilled, high-paying jobs. It's unfortunate that they're no longer going to be here, and we would like them to be here. So.
Thank you.
Okay, thank you all very much for being here.
Thank you, Madam.
Mr. Lavelle. Terrence Stovall. Lindsay Thompson. Teresa Edelin. Stephen Sprague. Bruce Bariano. Okay. And we'll start to my right. Bruce, we'll start with you and just go down.
Still afternoon. Good afternoon. Bruce Bariano. I'm here on behalf of the Maryland Self-Storage Association and also myself, a registered lobbyist in the state of Maryland. You should all have received my client's paperwork, so I will not make reference to that. This legislation is rather catastrophic. It really is, very seriously. Respectfully, and I do mean respectfully, a huge mistake was made when the blueprint was not funded when it was passed. And I think a mistake is going to be made on a mistake. Because look at all the people that have come here today. Regular people for all sorts of businesses, men, women, different genders, different people of ethnicity and color. And you pass this, you're just going to destroy their lives. You're going to destroy their businesses. The effect is going to be that they're not going to be able to stay in Maryland. They're not. And what you're saying, and I mean this sincerely, I mean, you all can do what you want to do, but what you're saying is Maryland is closed for business. We really don't care about businesses. We're going to do what we think we're going to do, and we're going to worsen the business climate, which already is very bad. It was very bad many years ago. And we're going to say, we may as well put the signs up, we're closed for business, because the impact of this is going to be passed on. And if it can't be passed on and you can't make a living, you're going to move somewhere else. You really are. I would really urge an unfavorable report, and please listen to the people that came here. We've taken the time and effort. These are your real, this is the heart and soul of the state of Maryland coming here begging, don't do this to us. We want to stay in Maryland. Thank you. Sorry.
Hi, I'm Teresa Edlin, and my company is Sonny's Trucking. I'm down in Southern Maryland, Prince George's County in Aquasco, Maryland. We have approximately 6 employees, 4 trucks, 1 up and ready to come up. We haul aggregate material to different companies and also private sectors. Adding a sales tax on repairs, specifically on repairs and maintenance for trucks, will be catastrophic to our business. My husband does do a lot of his own in-house, but if there's something that's for safety that he can't not do, or he's going to do like that will cause harm to him, we would have to outsource it. So we outsource even our accounting and our payroll, and it would be, it could be detrimental to our company. It also could be like the straw that broke the camel's back. It's like getting the trucks that we already have up and running. We really just got 2 more up on the road, and so to have the tax come, and if anything big come, like a motor or anything that will cost us the finances that we do have. It could cost us our profits, the profits that we do have, and also to have employees that continue to work so they can do what they need to do. So even with parts that are expensive, it's not common today for labor to be more than what the parts cost. So we're already paying more on labor than what the actual parts cost for the truck. So to add a service sales tax to that would be detrimental to the business.
Thank you very much, Madam Chair, members of the committee. My name is Nick Lovell. I work for Unemployment Tax Service. I am here today in respectful opposition to House Bill 1554. Unemployment Tax Service is a leading provider of unemployment claims and cost management and consulting services for employers in the state of Maryland. We serve and represent employers from a variety of industries and of all sizes. House Bill 1554 would dramatically increase costs and tax all of our revenue as a company, but it would also drastically increase costs for all of our clients as well. This tax targets essential services that businesses cannot function without. And small businesses are facing tens of thousands annually in new costs, many reporting that it would eliminate their profits, as well as the fact that larger employers will face costs in the hundreds of thousands to millions due to this that would otherwise fund expansion and job creation. This tax personally would cost our business tens of thousands a year, and our clients even more on the services we provide. The costs are tremendous, enormous, and it would contribute to inflation. The other thing I wanted to, since it's in my sector, I wanted to address some of the statements that Delegate Moon made earlier in terms of the claims that unemployment rolls are doubling by the moment. Seemingly, it seemed like he was alleging due to the Trump administration. Unemployment claims for our clients have remained steady and have even gone down some since January 20th. We believe that if this committee wants to increase unemployment claims in the state of Maryland and increase the unemployment rate, pass this bill, because that's what this will do by causing employers to lay off employees. Thank you.
Madam Chair, my name is Terrence Stovall. I'm here on behalf of the National Association of Landscape Professionals. We are the national trade organization that represents the $3.4 billion landscape industry in the state of Maryland, and we employ over 30,000 folks in the state. Member companies specialize in lawn care, landscape maintenance, tree care, irrigation, as well as water management. Our members are business owners who are and employ other trained state-certified landscape and lawn care professionals to work daily performing essential services to homes and businesses to maintain their landscapes, sustain the environment, and enhance and maintain healthy and green safe spaces across the state. The services targeted by House Bill 1554, such as marketing, payroll, and landscaping services, are essential, as they provide critical services required to sustain business operations. Taxing these services will place an unnecessary burden on businesses and their clients who are already dealing with inflationary costs, making it that much harder for them to sustain and maintain operations in the state of Maryland. Specifically targeting landscape services means that our industry will especially be impacted. Not only will we bear the costs associated with essential administrative services, as mentioned before, but our members will be specifically affected when servicing our commercial clients, leading to an increase in costs for businesses across the state. I respectfully urge you and members of the committee to carefully evaluate the implications of this legislation and request an unfavorable report. Thank you.
Good afternoon. My name is Stephen Sprague. I'm here representing the Maryland Arborists Association and also Carroll Tree Service. I'm the immediate past president of the Maryland Arborists Association, and we have about 160 member companies, 170 member companies that employ thousands of people. I don't want to belabor all the points that have been made. I agree with almost all of them. This just seemed like a horrendous approach to collecting revenue. For the tree care industry specifically, we have kind of a bifurcation of like semi-professional or unprofessional, professional companies. The Maryland Licensed Tree Expert Law has kind of funneled some of us in one direction where we follow all the rules and pay all the associated costs, and then there's a whole nother tier that just kind of shows up and does the work. This is going to further exacerbate that, leaving us at a competitive disadvantage with companies that aren't functioning above board. Tree care, maintenance, and plant health care are discretionary, so all the economic impact of the recent layoffs and firings or whatever's going on, those people are all going to be spending money or not spending money. Those organizations are going to be spending money or not spending money based on what's going on. So we already have that hurt. It's very strange, like if somebody comes in to buy a retail item from me, I collect the tax and pay it. But at this point, I invoice somebody, and then what? I collect it, I remit the tax to Maryland when I get the money. Like sometimes it's 60-day pay, 90-day pay, or I don't get paid at all. So I'm not sure how that works. I will say that the citizens are going to pay in the end. And if you need more money from the citizens of Maryland, just be forthright and take it out of some mechanism that's not going to cause a whole bunch of administrative burden.
Thank you. Questions? The Vice Chair.
Thank you, Madam Chair, and thank you, everyone, for your time and your patience today. Mr. Bariano, my good friend, I appreciate your testimony, but I do need to make sure I correct the record on one thing. You said that the blueprint, it was a mistake that we passed the blueprint without funding it. I just do want to say on the record that when we passed the blueprint, because I remember taking that vote that we forward funded it for several years, and yesterday on the House floor, the chair of the Appropriations Committee eloquently pointed out and shared that the blueprint is funded for 5 years total. So I just want to make sure that the record is clear on that and that the blueprint was funded, forward funded when we passed it. Thank you.
Okay, any further questions? Okay, thank you very much for being here. Lindsay Thompson.
Madam Chair, that's one of my colleagues. She's
Okay.
over in the Senate.
Thank you. Daniel Doherty. Melvin Thompson. Greg Brown. Edward English. Jeff Wilson. Steve Wise. Kelly Schultz. Kirsten Haskell.
Melvin Thompson's over in the Senate.
Okay, thank you. Okay, we will start with, can I start with Ms. Schultz, and then we'll just work our way down.
Thank you, Madam Chair, Madam Vice Chair, member of the committee. It was a lot more fun to be here last week when I was at the table. And I was very proud at that moment in time to sit on a panel and sit next to the governor promoting an economic agenda about investing in the areas of sciences, technologies, biotech, quantum, all of those things that I think we all believe amongst us that are going to be able to create economic growth and viability, not just for those companies in those industries, but for the individuals that are actually right now learning in our K through 12 system and through our training programs and through our community colleges and through our four-year universities. We need to be able to have a home for them because right now, all of the assets and the resources that we've talked about as long as I've been in this profession, all of those federal resources we have, and we sit back and we think that we're fat and happy, those resources are gradually going away. And in some areas, it's not gradually. My mission as CEO of the Maryland Tech Council is to be able to make sure that we create an ecosystem that is the #1 in the nation so that we can house them here for future generations. I forgot to say I'm Kelly Schultz. I'm CEO of the Maryland Chamber, not the Maryland Chamber of Commerce, the Maryland Tech Council, and I respectfully oppose this bill and really identify with the difficult position that you're in. So thank you for your time.
Good afternoon, Madam Chair and members of the committee. My name is Jeff Wilson. I'm a certified public accountant and CEO of the W2 Group located in Upper Marlboro, Maryland, and Prince George's County. I strongly oppose House Bill 1554 as it will drive businesses to neighboring states and significantly increase costs of Maryland businesses and individuals. The bill not only adds a 2.5% tax on business-to-business services, but also creates hidden costs that will make Maryland businesses just less competitive. Many small businesses currently rely on CPAs for tax preparation only. If passed, this bill will force small businesses to hire accountants year-round to manage sales tax compliance, adding an immediate financial burden beyond just the tax itself. It's a multiplier. Beyond increased costs, the bill makes Maryland just less business-friendly, especially compared to our neighboring states like Virginia and Delaware, which do not impose these types of similar taxes. I recently had one of my clients move their business from Maryland in PG County to Virginia due to these similar concerns about the business climate. A tax like this could push more businesses away permanently. Maryland should be attracting businesses, not making it harder to operate. For these reasons, I respectfully urge an unfavorable report on House Bill 1554. Thank you for your time.
Hello, I'm Kirsten Haskell, and I am the president of World Biohaztech. What we do is we inspect labs that work with highly infectious disease. And I live and work in Anne Arundel County, and I'm here because I represent NAICS Code 5416, Management, Scientific, and Technical Services, and I'm in strong opposition to this. We're small business owners. We work hard, and I'm sorry, guys, I'm a mom. Women-owned small business owners, we work harder, okay? And this tax is going to be devastating for us, and it's going to be devastating because I love my Maryland employees, and I will do anything to keep them. But you are just making it harder, and let me tell you, with the way the things are going with the federal government right now, with FDA, with USDA, the State Department, USAID, it is hurting our scientific and technical industry. It's not right. And to get this, to hear about this House bill over the weekend, I mean, I just feel that I'm being unsupported, and as a woman-owned small business owner, I'm being attacked. And so are my colleagues. I like to hire other Maryland-based women-owned small business owners. So other delegates that we haven't heard from, I would like to hear from you today, because we are making sacrifices here.
Hi, my name is Greg Brown. Thank you for your time today. I'm the president of Monocacy Hospitality in Frederick, Maryland. Couple things. I think Delegate Moon brought up, it kind of feels like the plane is crashing into the mountain. And so there's a couple things. One, I do agree this legislation is predatory towards small businesses and sends the wrong message. I think most of the issues have been addressed. It's going to cost my businesses tens of thousands of dollars. We continue to talk about the blueprint. The question that I've been asking for 3+ years is, I value education. I've got 3 kids in public school. I'm not sure why Maryland continues, everyone wants to say we need more money for education. I'm not sure if more money necessarily creates better education and better outcomes for our kids. I think there's other things that go into that, but at the end of the day, right now, Maryland spends 40% more per student than the national average per state. So it seems like we do have an opportunity to look at how we're spending our money there and what the outcomes are from that. I would also say state spending is up 70% over the past 7 years, while GDP in Maryland's only up about 3%, versus the national average of states where their GDP is up 11%, and they've maintained and controlled their government spending. I also want to point out state of Pennsylvania. $40 billion for 12 million people. State of Maryland, $67 billion for 6 million people. That's basically saying we're charging our taxpayers 300% more on an annual basis to live in the state of Maryland. I've spent time in Pennsylvania. The services aren't that much different. So I think we need to look at cutting, and I would also say a recent survey in the Baltimore Sun said that over 70% of Marylanders say that we need to decrease our government spending. Less than 3% said we should increase government spending.
Thank you.
Thank you, Madam Chair, members of the committee. I'm Dan Doherty. I'm here representing the Maryland State Dental Association and the Maryland Society of Oral and Maxillofacial Surgeons. I have submitted written testimony, and I don't intend to repeat that. I would like you to focus on one thing that has not been focused on to date, and that is the business entities that are 501c3. The State Dental Association has a dental foundation. Its president is unpaid. He's a volunteer. They have employees whose costs are about $150,000. They go out, they seek grants, contributions from various sources. Last year, we provided $2 million in free dental care to the underserved. These taxes on the people who volunteer their time and on the foundation and having to pay for the services that lets it continue to function is going to diminish the care we can get to those individuals. So I would ask you to look at that aspect, which is somewhat different than the others. And I do not envy the job you have in front of you, but I thank you for your time, and I would urge either an unfavorable report or at least carve out the 501c entities from the bill. Thank you.
Any questions? Okay, seeing none. Oh, sorry. Oh, they were on and they were off? I was confused. Okay, we will start with Delegate Buckle. If your light
Madam
goes
Chair.
off, just flag me down.
Thank you, Madam Chair. I appreciate it. It's obvious, I think the gentleman to my far left, it's obvious we have a spending issue more so than a revenue issue. We've far outspent our economy. That's obvious. But former Secretary Schultz is here, and I asked someone here earlier today, do you have any idea why the outsized impact, I don't think it was Delegate Moon's intention, but the fiscal note reveals that there's an outsized impact on what I would call tech services, data, IT, cyber applications from the bill. I mean, it adds up to almost $600 million. I thought that's what we were supposed to be the best at. I thought we were trying to attract all the companies to come here and to be the world's best in this. That's who you represent. What kind of impact is that going to have when they hear all these things? We're adding more taxes to them at very specific levels. I don't mean to take issue with the Maryland Tech Council. I don't think we're probably the best at any of the tech things, quite frankly. You can look at data. We come close. I'm not criticizing them. I'm just saying that we like to brag in Maryland we're the best at stuff, but you look at objective data, and the research triangle in North Carolina has way more biotech, and so does Massachusetts, and there's a lot of places. We raise taxes on people. What do they do in your industry when they're targeted like this?
Yeah, so we're seeing it more and more now, right? There is definitely movability, and we've seen it over this past census and even the census before when we start to see the migration to other states. So you mentioned some of the other states that are out there that have been competitors. I will say emphatically that Maryland is the third largest biotech ecosystem in the country, behind California and Massachusetts. But I think that we have to be cautious of that. And even when I sat in the positions that I sat in, we would emphasize those types of assets and resources that we have in this state, like our access to NIH, like our access to FDA for cyber and our technical organizations, access to the NSA and FDA and our military organizations and the cyber organizations that have come here for a purpose, most of which is because of our proximity historically to Washington, D.C. and the federal dollars.
But that changes.
But that changes. And it is changing right now as we speak. Right. And as many of you I've served with, and we've talked about the economic viability of this state and the possible growth that we have here. And we have to understand that what we have perceived as assets and resources in the past are no longer going to be assets and resources, and people certainly do have the ability to leave. And you have heard that, and I will just give a shout out to many of the folks that came up to this table and that are still waiting to testify that are members of the Maryland Tech Council and other organizations in the state that have taken time out of their schedules today to say this. They don't want to come here to say this. I don't want to come here to say this. It's not a fun thing to talk about.
Yeah, there was a statement years ago that demography may not be destiny, and I think sometimes geography may not be destiny either. We just rely on our geography as our main selling point, but if your policies aren't good, sometimes the outcomes aren't good if geography doesn't matter as much.
Well, and Delegate, I mean, we mentioned some of the other larger competition-type states that are working against us at this point in time. But there are other states that we never would have considered in the mix of where those high-tech companies can go. Tennessee, thank you very much. Who just said that? Thank you. So, yeah, that's right. And Ohio, right? And Kentucky and Kansas City. And these are all areas that I'm very close with these other tech organizations who are now starting to see a boom because they may have had a better policy in order to be able to attract. And at this point in time, I would say it's not just an attraction of other companies and other businesses here. I would say an emphasis needs to be on the retention. Maryland should want to retain the good quality folks in which we have.
Thank you.
Delegate Roberson.
Thank you, Madam Chair. Just one welcome to Mr. Wilson. You are in Upper Marlboro, correct? Upper Marlboro Pike, am I right?
Yes, sir.
Yeah, and that's District 25, am I right?
Yeah.
Yes, thank you, and welcome for the work you do. Ms. Schultz, I just had a question for you. Going to Tennessee, one, do you know the sales tax in Tennessee?
I do not off the top of my head know the sales tax.
7%, so it's higher than ours, am I correct?
If theirs is 7%, then it is, yes, higher than ours.
So
Actually, not exactly, because there's 9% on beverage, so you kind of got to look at both.
got you, appreciate that, but ours is 9% on beverage as well. Am I correct? Yeah, I was talking about the business part, though. Appreciate that. Okay, you were saying here it's 9%. Got you. Okay, thank you, sir. Appreciate that. As far as the comparison, because last week you talked about the positives of bringing tech here, and I have your concern as well that we're trying to solicit technology here. How is this, in comparison to what you're dealing with last week, how do these, I know it's different bills, but compare as far as in one hand we're trying to attract, but the other hand, I hear the impact on the businesses as well.
Yeah, well, I think you said it quite nicely, Delegate, but thank you for the question. When I was here last week, it was to support the governor's legislation, which is the Decade Act, which talks about incentive type of programs to be able to attract and also expand businesses that are here, but to attract outside companies that are here. This is not that.
Got you. And so it would impact the businesses that are already here, to your point.
Well, I believe that we also heard some testimony from those that are in the real estate business earlier today, where they had talked about how potentially this could be detrimental for site selectors or for those that are in the real estate business looking commercially to see where they have the most competitive business rates for their companies to go if they are expanding to one state over another.
Got you. Appreciate that. And then, sir, at the end, you mentioned trying to carve out 501c3s. Am I correct?
Correct.
And because, as I understood it, as it was explained, the 501c3s are not impacted just like the government to government. I think Delegate Roberts raised this as far as government contracting. So it would not impact the 501c3s as is written.
That's not the way I read it, but
Okay.
it is one of those areas where we don't have a clear interpretation.
Got you. Okay, so we need to make sure that's clear. Thank you for that. And the reason I raised, going to your point, back to the point about the 7%, is that right now we are at 6%, so we're lower. So you would be in favor of, say, 7%, since you prefer Tennessee, versus this tax on 2.5%.
Am I testifying under oath as to
No,
whether
I'm
or not I
asking
want
the
a
panel.
7?
I mean, I'm just saying, as we're looking for alternatives, because the reality is, we are dealing with the budget shortfall, as you shared that, you'd hate to be in this position, as I hate it as well. But the reality is we are here, and so I'm trying to see what is an alternative.
Delegate, here's my response to that, and just very, I'm very.
And I wasn't just saying you, I was asking.
No, but I'm
the
grateful
panel
for the
as
question,
well.
because
Yeah.
I do believe that those questions all have to be answered, and I believe even the sponsor said that this committee, unfortunately, is responsible for coming up with some of the answers to those questions. I know that my members would be happy to participate in those conversations should they come up, right? To be able to say, well, let's look at what all of those options are. I think part of this is a procedural thing where I think many of my members, they did not know until maybe this weekend or, very recent that this conversation was happening. I'll let the others speak for themselves, but we would be happy to be a part of the conversation should the committee so choose.
Thank you. Thank you for that. Thank you, Madam Chair.
Delegate Griffith.
Thank you, Madam Chair. Thanks for being here. And my first question is for Ms. Schultz. So I want to follow up on Delegate Buckles' line of questioning. So what people don't realize going on at Aberdeen Proving Grounds is right now, our biggest competitor in the tech space is Huntsville, Alabama. And Huntsville, Alabama sends delegations to Aberdeen every week. And all they're doing is recruiting our tech companies. Now, they have to have a footprint here, but all the tech companies in Aberdeen are all relocating their headquarters to Huntsville, Alabama because of things like this, frankly. And so, and I don't know if we're seeing that in other industries. And you went down the road a little bit, but in Aberdeen, it's real. I mean, literally, Huntsville comes up, and almost every week they're recruiting some small company, sometimes big companies. I can think of a few names off the top of my head, and they're relocating their headquarters to Huntsville, keeping 2 or 3 people in office because that's part of the contract, but they're moving their base of operations to Huntsville, and it's crushing us up in Harford County. So can you talk a little bit about how that's going to be exacerbated if this bill gets passed?
A little over, about 20 years ago, I was in defense contracting, actually, and Huntsville, Alabama didn't even exist.
Mm-hmm.
And I was getting to the end of my career with that organization, and then everybody started talking about this town in Alabama, Huntsville, Alabama, that started winning these contracts. And Huntsville, Alabama became a town overnight, basically, due to the switch in this. I would say government contracting in general, there is that threat, right? And you'll hear from others in those industries that are involved in government contracting, because again, a lot of those resources that we have here in those federal buildings, we like to say we're very proud that we have 74 federal laboratories in Maryland. We should be careful on what we don't know is going to happen, right? So those jobs, those contracts go with that. And so I think there's a multitude of different industries within the tech field that has that same critical concern.
Thank you. And my next question, ma'am, in the middle, I forgot your name, I'm sorry.
Oh, Kirsten Haskell.
Kirsten, thank you. So your testimony was interesting. So there's a lot of conversation around this bill being focused on trying, in some part, trying to respond to some of the decisions being made in DC. But your testimony, and if I'm misinterpreting it, please forgive me, feels like that you feel that this bill would actually compound the decisions that are being made in DC. Is that
Exactly. That's what's happening here, is that, okay, thankfully, I'm a diverse business, and I work with the government, and I also work with pharma and other private research institutions and universities, okay? But now I have to pivot, like so many small businesses, and I am focusing more on private research, right? And the fact that now there's going to be this additional tax in addition to loss of planned revenue, it's just absurd. I just feel that I'm just wondering why delegates would think that this is something realistic for me to figure out. And so many times I hear, oh, the small businesses, they're so innovative. They are so innovative. Okay, I'm innovative to a point, but you guys are going to break me.
Thank you. Thank you, Madam Chair.
Delegate Miller.
Thank you, Madam Chair. Mr. Brown, thank you for being here, especially I can't imagine the impact of this, plus if we did the sugar tax and everything else would be on your business. So thank you for being here. I appreciate it. I did have, and Ms. Haskell, like not many people inspect labs, is that right? I mean, that's a pretty niche kind of job.
That's right, and we're the only,
for women-owned?
Yeah, in the United States, we're the only women-owned small business, and there's 3 other companies in the United States that do that, 2 of which are huge. Actually 3, they're all big but me, but I'm the best.
Of course you are.
Of course, yes, thank you. I appreciate your being, I really appreciate that perspective. And of course, Ms. Schulten, thank you for being here as well. I did have one other question because in my other life, I do optometry, I do doctor stuff. And so I am concerned about the impact on medical providers because private practitioners, most of them don't operate under a 501c3, or do they? Am I there? So the hit on them, and right now we have a lot of impact as far as prior authorizations and what that's doing to the medical community and the thin margins that especially primary care doctors operate under and what needs to be reformed in that. So I'm very concerned about the impact on medical providers. So if you had any more information you could give, that would be wonderful.
Well, what's happened is the insurance companies are constantly lowering the reimbursement rate. More and more providers are opting out of participating with these insurers, which closes the door to many people being able to access care because their insurance doesn't cover them going to these individuals. This kind of attacks on the many services that dental offices, physicians' offices, whatever facility you want to pick, is going to increase the overhead, and they're going to have to increase their reimbursement rate. And it's just going to exacerbate those who are participating in insurance and the access that people have to that care. Access to dental care is probably the most, probably the worst of any of the medical professions because, number one, it can be argued it's really not an insurable risk because everybody has dental disease. Number two, it's not part of Medicare, so you don't have that Medicare standard for reimbursement. And the insurance companies keep driving down their reimbursement rates even more. So they're getting it from all sides, just like every other small business is.
Thank you. I hadn't thought about the impact, so I'm glad you were here to clarify. Thank you.
Delegate Buckle?
But I have to agree with Delegate Roberson's point. Tennessee does have higher sales taxes. There's no question about that. Does anybody know if Tennessee employs a individual income tax? You pay any personal income taxes? Does not. Does anybody have any idea what the corporate income tax is in Tennessee? It's 6.5%. Does anybody have an idea that Tennessee, the total effective business tax rate is 4.5%, according to all metrics, which is lower than the national average in all but 9 other states? So is it an effect of this one policy is different, or is it the cumulative effect of businesses, of our tax scheme, our tax rate, and we're always looking for more that produces the effect of you can't survive, you can't thrive, you can't expand, you can't stay in our state? Which one is it? Is it just this bill, or is it the fact of all the other things that we have that make it so difficult?
I mean, I think it's the fact of all the other things. I mean, I recently relocated people to Maryland, and they chose to live in West Virginia. They work in Maryland and live in West Virginia because the cost was just too high. And I think kind of the cat's out of the bag. You can see the data in the Maryland Chamber Red Book, right? I mean, we're virtually dead last in everything business. And I think that we're at a fork in the road where we have an opportunity. We could decide to put on new glasses and do things differently than what we have for the past 30, 40, 50 years and do something drastic, cut taxes, cut regulations, incentivize and provide a catalyst for small business. Because if we do that, I can promise you, small business will hire people, small business will grow. If you're a small business and you live and you operate in a community, I believe that every dollar spent in that community has about an 8x impact. An 8x impact. So every dollar spent generates $8 of positive economic impact. So we should be looking at things very differently and slashing taxes and slashing our government spending. Again, to normalize our government spending, instead of $67 billion, should be close to $20 billion if we wanted to just compare to what Pennsylvania spends.
Thank you.
Okay, thank you all very much for being here.
Thank you, Madam Chair.
Alex Austin, Alex Smith, Angela Rose, Mark Schlossberg, Pamela Fernandez, Kirk McCauley.
Madam Chair, I was called before I was over to Senate building.
Okay, have a seat.
Edward English.
Okay, have a seat, thank you. Deepak Thacker. Okay.
Good afternoon, Madam Chair, members of the committee. Alexander Austin, President and CEO of the Prince George's Chamber of Commerce. The Prince George's Chamber of Commerce represents a diverse business community, and we have strong opposition to House Bill 1554. We represent about a little over 800 members collectively, and many of those members, about 63 of our members are small businesses, 40% of our membership are professional business service firms. And so this particular bill as proposed we feel has detrimental economic impact. Primarily, it provides a disproportionate burden on small businesses, as you already heard. You know, as you, again, already heard, businesses operate on thin margins, and the new tax would further erode their ability to thrive in an already challenged economic environment. I really want to spend time to focus on, you know, the competitiveness that we talked about today for the state. You know, we believe that this bill puts Maryland at a significant competitive disadvantage. Again, potentially driving businesses to relocate or seek services outside the state, resulting in potential loss of revenue and potential job opportunities. When looking at the top states that we've mentioned in the United States, you know, there are 4 primary factors that stand out of why they're in the top categories: business friendliness, tech and innovation, workforce, and number 1 is the cost of doing business. That has been synonymous against all the top states in the United States. Now, I think this is an opportunity. And for that reason, Prince George's Chamber of Commerce strongly opposes, and we encourage that if there's an opportunity to reconsider or take an alternative, we're here to talk.
Madam Chair, committee members, thank you for your time and hearing me out. The restraints on growth from, I'm Trey English with Brooks Health Tire and Auto Centers and a proud member of the American Retailers Alliance. The restraints on growth in a poor economy are something business leaders can combat and have done so in the past. However, we are still recovering from COVID loans and losses, a poor economy increased, payroll due to Annapolis mistaking a starting wage for a living wage, now endless fees, taxes, and no relief in sight. Sadly, my best advice to any entrepreneur opening a small business is not in Maryland unless you are a nonprofit with government contracts. Our family business started back in 1943 in Baltimore. 4 generations later, we cannot afford to expand and grow in our beloved state, where in every surrounding state offers better opportunities. But who will this tax increase hurt the most? Middle class and lower income citizens, that's who. Small businesses are leading employers in Maryland. When employers are forced to cut back, payroll is first affected, price increases are second, and moving to Pennsylvania, Virginia, or Delaware are our third and final stage. How can Maryland's economy benefit from this? This tax strategy is like putting a Band-Aid over an ever-worsening wound. We need to re-examine our spending issues before middle class is just a dream for Maryland's hardworking citizens. I urge you to reconsider this option for revenue gains. I project this will cause long-term damages that will outweigh and outcost more than the revenue gains. I worry about Maryland's future as a father and a member of a family business who would like to be around for another 82 years. Thank you for your time.
Good afternoon, Madam Chair and members of the committee. My name is Deepak Thacker. Thank you for this opportunity and allowing me to speak here today. Let me start with my story. I immigrated here 31 years back from India. I worked as a programmer for a few years and then went back to school, the business school at University of Maryland. After graduating for 12 years, I worked as a regulator. Then nobody knew about AI. I built a surveillance system that is still today one of the marquee systems that does the insider trading and fraud detection. Fast forwarding, 15 years back, I started my company. And I'm gonna give you all 2 scenarios. I have the government contracting company that serves 7 states. So I'm bringing money back from 7 states to here because I'm headquartered here in Rockville, Maryland. 8 years back, I started a technology incubator where I have funded 8 companies and most of them provide AI-based solutions. It is selling the licenses and selling the tools where I charge the commission. The commission sometimes it's 5 to 10%, and it's on top line. So if I have to pay 2.5%, now basic finance 101, for some of these companies, my EBITDA is half. So the valuation is half. If I have to go out and raise money from venture capital and private equity, I can't. I want to talk about the government contracting that we compete in Virginia, but I don't have time, but please do ask me a question. I'll walk you through the math because I'm a data scientist and I want you to know the numbers, how this is gonna impact us. So please ask me questions after everybody's done.
Thank you. Ma'am?
Good afternoon, Chair Atterbury and members of the committee. My name is Angela Rose, and I am the President and CEO of the Harford County Chamber of Commerce. We represent over 630 businesses, which equates to over 20,000 employees. This is our membership, and I quickly went through and highlighted all the businesses that would be affected. Just by my simple math, it's over a third, more like 2/3 of businesses that would be directly and indirectly impacted by this bill. And these are small businesses. These are owner-operators and men and women who live and work and want to be successful in Harford County and have called me and emailed and are very concerned with this bill because it's going to directly impact their bottom lines. You've heard today all of the testimony about thin margins and how this will impact them. The delegate from Montgomery County who talked about education, I can tell you firsthand that our members are very, very committed to education. I have a member who owns Emerald Tech, a defense company. Delegate Griffith referenced APG. He created a defense interns program. We are very, very committed to making sure that education is a top priority, but if you continue to chop away at what these small businesses are trying to do and how they're being successful, there will be nothing left. So with that, I ask for an unfavorable report to House Bill 1554. Thank you.
Madam Chair, Vice Chair, members of the committee, my name is Kirk McCauley. I represent service stations, convenience stores, and automotive repair shops in the state of Maryland under the brand WMD car. This is called a business-to-business tax, but it's actually a business consumer tax. Small business will have no choice but to pass it on. Their margins are razor thin right now. They're struggling to survive, and the tax will just get passed on. Our locations around borders will really be hurt because when they pass it on, it'll put them in an unfair advantage. Some would even call this a shot across the bow, a get out of Maryland tax. Around the borders, in a competitive environment, they already lost gas, tobacco sales, and at some point, the last straw is going to break their back. The only thing they can do is relocate, get out of Maryland, try to make some money. I would not be surprised to see, I'm from Southern Maryland, and we got the new Macmillan Bridge. There's a beautiful bridge going right into Virginia, and they just pour across that bridge to go into Virginia with a big shopping center built right there. No one lives there, but Maryland comes there. I think they're going to put a big sign up on the Virginia side. Thank you, Maryland. See you next week. We can't keep chasing business out of Maryland. It just don't work. It doesn't work for our business. It's not going to work for our consumers. Thank you.
Thank you. Mr. Thacker, if you could just briefly touch on the, you wanted to talk about federal contracting.
Thank you, Madam. So the IT sector in Maryland plays a very crucial role in the state economy and contributing significant job creation. According to the Computer Technology Industry Association State of the Tech Workforce 2024 report, Maryland ranked 15th in the net tech jobs in the total workforce with about 228,000, which is 8% of the overall employment. There are 15,000 tech companies in Maryland, and those tech companies contribute $37.8 billion, which is 8.9% of the revenue. in Maryland's economy. Now compare that to state of Virginia. Just Northern Virginia itself, they have 15,000 tech companies, and they contribute $73.7 billion, 2 times more than us. Now compared to 37 billion of us. Now we heard about what's happening in DC and the job cut. I did reach out to the governor's office, and the net job cut in Northern Virginia, when they have $73 billion billing, it's only 300 jobs. So that has less impact than this, because we have to compete as a government contractor when we beat CMS, NIH, FDA. We have to compete with Northern Virginia companies, and this will put us at harm because we are paying more taxes, and guess what? There are many that will migrate from here and cross the river because we cannot compete Virginia companies on finance, on the cost of the projects.
Delegate Griffith?
Thank you, Madam Chair. Just very briefly, Ms. Rose, thanks for being here representing our businesses in Harford County. Can you take just a little bit of dive into, we spoke earlier about the arms race, figuratively and literally going on between Huntsville, Alabama and ABG, and the fact that we're losing so many businesses, especially tech businesses, to Huntsville, Alabama. Can you speak to a little bit of that and how it's affected membership and obviously affected just even morale in Harford County?
Absolutely. So speaking with the owner of Emerald Tech literally just a few minutes before testifying, confirming exactly what you're saying. It's harder to do business here, the increased cost of doing business. The tech companies are concerned about being in Maryland and getting contracts here and being based here. And if you look at it in Harford County, we have companies that may have a flag here but no employees because they are more prosperous in Huntsville or other military-oriented towns that have that ecosystem that are much more business-friendly.
Thank you. Thank you, Madam Chair.
Thank you for all you do for Harford County.
Okay. Thank you very much for being here. We appreciate it. Thank you.
Thank you.
Okay. Just 2 quick things before I call up the next panel. One, I just want to thank everybody for hanging in there. This is an important issue, so thank you for just being patient while we get through all of the testimony. We certainly do want to hear from everyone. And I do just want to mention there was a lot of conversation about Tennessee, and Tennessee, for all those who care, ranks 31st when it comes to education. So there's that to consider. Dana Kaufman, Brett, Juliana Buono, Marcus Jackson, Delia Burrell, Chip Bertino, Stephen Green, Evan Richards. Okay.
Madam Chair, Madam Vice Chair, members of the committee, for the record, my name is Dana Kaufman. I'm here on behalf of Lifespan Network, Maryland Association of Adult Day Services, and Maryland National Capital Home Care Association. These organizations provide care to the state's elderly and disabled populations, often through the Medicaid program, and they are covered under this bill just like any other business. Our concerns are focused on 3 points. First, Medicaid providers have historically been underfunded in this state, but unlike other businesses, Medicaid providers do not even have the option to pass these costs on to our residents or clients, making this truly an unfunded mandate. This mandate will exacerbate funding issues and will weaken the state's Medicaid provider network. Second, passing the tax will result in higher health care costs, even for those senior care providers that do not participate in the state's federal or state assistance programs. Many of our residents and clients are on fixed incomes. The state runs the risk of these clients having to spend more, spending down their resources, and ultimately needing Medicaid at a much higher cost to the state. And third, the last point I want to make is that we believe that this tax will result in an intra-company taxable services. Many corporations, especially in healthcare, they benefit from common services such as employment, and HR services being provided by one entity to all their other related entities, which will exacerbate this tax. So thank you very much.
Thank you, Madam Chair. Members of the committee, Brett Leininger here on behalf of NAFA Maryland, who many of their members are financial planners testifying in opposition to House Bill 1554. Basically due to the impact on small businesses, increasing operational costs. Small businesses rely heavily on financial planning services to manage their finances in an effective way. Imposing the tax would increase their operational costs, obviously, reduce access to these essential services. Added expense could lead small businesses to elect not to hire a financial planner for their business planning and exposing them to financial risks and compliance issues. Competitiveness from what the neighboring states are doing with respect to financial planning. It's, to my knowledge, no other state neighboring us does tax those services to businesses. Finally, I think we've heard it before, the legislation flies in the face of where the governor's vision is to grow our way out of the financial crisis. And with that, I'm happy to answer any questions.
Good afternoon, Madam Chair and committee members. For the record, my name is Marcus Jackson, Director of Government Affairs for the Associated Builders and Contractors of Maryland, representing 1,500 member companies across the state. I'll be brief because I know you have a copy of my written testimony today. I'm here to express our strong opposition to House Bill 1554. This bill will have a profoundly negative impact on the construction sector in Maryland. Small contractors and subcontractors, which are the backbones of our industry, will disproportionately be affected. These businesses often operate on thin margins, and we've heard a lot of that today in the testimony that came prior to mine, and will struggle to absorb the increased compliance costs and tax burden, potentially leading to job losses and business closures. The construction industry is a vital engine of Maryland's economy, driving job creation, infrastructure development, the overall economic growth. We understand the need for revenue generation, but we believe that this bill will have an unintended and a negative consequence to the state of Maryland. And for those reasons, on behalf of the Associated Builders and Contractors and our 1,500 members, we urge the committee to reject House Bill 1554.
Good afternoon. My name is Chip Bertino. As a Worcester County Commissioner, small business owner, and representing the Chambers of Commerce in my county, I oppose Bill 1554. This bill is an attack on Maryland's small businesses and business owners who increasingly survive by grasping as best they can ever-shrinking margins that are constantly impacted by inflation, higher employee costs, spiraling healthcare insurance premiums, tariff uncertainty, and an unpredictable Maryland business environment exemplified by this legislation. This bill will charge us business owners 2.5% for a wide range of services that we rely on daily to operate, whether it's IT support, consulting, or accounting, or many other services. Small business owners such as myself outsource these services because we don't have in-house expertise. Such an additional mandated tax will put us at more of a disadvantage within the marketplace and could make more attractive businesses in nearby Virginia and Delaware. Budget revenue generation is top of mind for all of us in public office, whether at the state, county, or municipal levels. Each of us looks for ways to balance our respective budgets, not much different than small business owners. Respectfully, this business-to-business tax is short-sighted and will hurt business owners, the very individuals we should look to rejuvenate our state economy. We ask that you oppose this bill moving forward, and we thank you very much for your service.
Hello, my name is Steve Green from Garrett County. I own High Mountain Sports, sporting goods store, where we've had a great winter ski season. I'm also the chair of the Garrett County Chamber Legislative Committee, representing over 500 member businesses. When I was here for the PACE reception in January, Governor Moore spoke about his new, we're going to cut some taxes, but we're going to grow the business. And I was thinking to myself, now we're cooking. You know, let's grow this business so we can help grow our way out of this issue. This bill seems to do the exact opposite of growing businesses and would seem to throw cold water on the growth of businesses. In the last couple years, small businesses have had to grapple with minimum wage, the Maryland Healthy Families Act, and the upcoming Paid Family Medical Leave Act that keeps getting kicked down the road. Maryland and Garrett County businesses need some relief. We have had some issues this last couple of years. And sometimes it's not even the taxes, it's just setting up for these regulations. Like the paid family leave, like I used to do my payroll and I gave up on that. I switched to Gusto. Just setting that up almost took all of an afternoon. So it's just not the taxes sometimes, trying to figure out how to, be in compliance. We've got some issues in Garrett County. We've got this federal worker issue, whether or not how that's going to impact our tourism. We've got state tourism, heritage cuts coming. And we're a border county where West Virginia is really close and so is Pennsylvania. So I urge that we don't like this bill and we don't want to see it pass. Thank you.
Thank you. Any questions? Okay, thank you very much for being here.
Madam Chair, I have a quick question. My name is Paul Fernandez. I don't know if you called me in the last round, but I can't get up very quickly.
I'm sorry, tell me your name again.
Paula Fernandez.
Okay, I will take a look. Evan Richards, Adam Kane, Betty Stamen, Robert Foster, Tasha Cornish, John Fiastro. Did I? Yes, I did. Can you come up? And I'll start with you.
All right, thank you, Madam Chair, Madam Vice Chair, members of the committee. For the record, my name is Evan Richards. I'm here on behalf of the MBA, or the Maryland Bankers Association. Banks of all sizes utilize the services that are listed in this piece of legislation. And even though banking services themselves aren't taxed, this is still very problematic for our membership. So we're here respectfully in opposition. The main point I really wanted to emphasize is the use of these services to comply with federal and state banking regulations. The banking industry is very heavily regulated. Pretty much everything they do is subject to some sort of law or regulation, including the signage that they have located on their websites and in their bank branches. If they run afoul of these regulations, they face penalties ranging from fines to extensive legal actions, which of course are extremely expensive. And this is going to have a really disproportionate impact on our smaller members. I think of a member bank that we have that has one branch, operates one ATM, and employs 14 people. They rely heavily on these external services to ensure compliance with federal and state laws. And quite frankly, this is going to be detrimental to them. So with that, we urge the committee to oppose this bill. Thank you so much.
Thank you, Madam Chair, members of the committee. Adam Kane with Allegis Redwood Maxim. Allegis Redwood Maxim is based in Hanover, and we're one of the largest companies in Maryland, employing over 20,000 people, with some of Maryland's most iconic brands, including Aerotech, Tech Systems, Erickson Living, TradePoint Atlantic, and Maxim Healthcare. We're headquartered here and service the country and the globe. Actually, Maryland is the staffing and professional services capital of the United States. We're the largest in North America, headquartered right here, and proud to be a Maryland company. Just three basic concerns. I won't repeat much of what you heard before, but do want to emphasize as a headquartered company, as you heard before, that would disproportionately fall on companies that have payroll and property and equipment here. And that our other companies that we're competing with in all these industries won't have that burden. The second thing I'd like to point out is on the staffing and professional services is really essentially a double tax on wages. The service provided for the NIACS code 5613 is employment. And so you're essentially taxing wages and benefits and actually payroll tax. So you're taxing your own payroll tax. So about 80% of what the service costs are those buckets, and so that's what this tax would primarily fall on. This creates a huge equity issue, given that many of these are location-based services and are lower income wage earners, and so you're really taxing inequitably lower income folks, the wages of lower income folks. Thank you very much.
Hi, my name is Betty Cole-Stamen. Thank you for allowing me the opportunity to speak this afternoon. I want to focus on one item that I have not heard much about today, and that is the impact on the ethnic communities and other vulnerable groups that live within Maryland. Many of these groups own businesses and they rely on accounting and tax services provided by professionals such as CPAs and EAs. The knowledge provided by these professionals provides reassurance to these new U.S. residents that they are following the intricate laws that the United States and various states have. Many of these new business owners have not dealt with the level of complexities that our laws have when compared to the countries they come from. The addition of a sales tax on our services could mean many of these businesses will discontinue or cut back on the services that we professionals provide. This could encourage noncompliance with many of the laws. More errors will be made and misinterpretation of many of the laws regarding taxes and compliance will occur. These small businesses may even decide to go underground, thus creating a loss of revenue for the state. They may move to DC or Virginia, which we've heard a lot about. Lastly, the potential for more tax scams and more unregulated or fraudulent tax preparers increases with the assessment of the sales tax on legitimate businesses. Each time a new tax or law becomes effective, a group of people find ways to create scams and go after the most vulnerable in our society. I'd like to finish with the question that when I was putting this testimony together, I had one person that I talked with about this tax said, shouldn't the state be working on getting more of the state's taxpayers to become compliant instead of targeting the professionals who are trying to assist the taxpayers? I strongly do not support this bill and hope that you will feel the same way.
Good evening. Thank you, Madam Chair and Committee, for your attention during this incredibly long hearing. I too am inspired by all of my members who have come before, so I will be brief. For the record, my name is Tasha Cornish. I'm the Executive Director of the Cybersecurity Association headquartered here in Columbia, Maryland. I won't belabor the inflationary effects that this bill will have on our 600 businesses, but I will take a little bit of time to share the negative impacts it will have on their cybersecurity posture, as IT and cyber are one of the new NAICS codes that will be affected by this tax proposition. As you know, there are 26,000, as we say every year, there are 26,000 open cybersecurity jobs. Companies don't have the funds to hire this in-house. There are not enough people to hire in-house. These services are essential, not optional for businesses, government agencies, critical infrastructure. Imposing a tax will increase costs for businesses, disincentivize investment, and hinder small businesses that may struggle to absorb additional expenses. I also will not belabor the effect this will have on migration. Many of our companies have moved to some of these hotspots we've heard: Huntsville, Tampa, San Antonio, Augusta, Columbus, et cetera, and this will have more deleterious effects on our industry, which is a hallmark of our state. So thank you all for your time. We very urgently urge an unfavorable report. Thank you.
Thank you, Chair and members. My name is Paula Fernandez, and I came here from England to Baltimore City, Maryland in 2001 as a postdoctoral scientist in infectious disease research. I started GSS Health in 2008. We're a small federal government contracting business working with health scientists and military personnel in some of the world's most unstable regions to combat biothreats and strengthen global disease detection and response. The proposal to impose a 2.5 sales tax on all services will devastate my business. Scientists and innovators, especially us in the 5416 NAICS code category, are hurting really badly right now, as you all can imagine. And instead of relief, this tax will add both financial and administrative burdens at the worst possible time. Beyond the time and costs required to interpret and implement, it would cost my company more than $126,000 in direct sales tax and over $25,000 in extra costs from the services I rely on to keep my business running. Every penny that GSS Health makes goes directly back into the business. About 50% of our work is from government cooperative agreements, and the rest from big companies like Leidos and Black & Veatch through subcontracts. So I'm unlikely to recoup these costs because many of these contracts I have are multi-year. This tax would also force me to raise my overhead above 15%, which is a very important number right now, as you all probably know from this administration. If the taxes pass, I will be forced to relocate GSS Health to Virginia, a disruptive move at a time when my focus should be on pivoting my business to other clients. I urge you to reject this harmful proposal. Thank you.
Thank you. Delegate Roberson.
Thank you, Madam Chair. And to my, I'm sorry, your name from staffing agency?
Adam Kane.
Yes, sir. Mr. Kane, I just, so I have a passion for, I guess, staffing agencies just because I was a temp at one point. And so going to your point about how you said it was a double tax on wages, so let me get this clear. If, for instance, you have a company that says they need a temp person, so they hire a staffing company, you all provide an individual to that company. Where does the tax come in? So I guess they would tax you, you all would be taxing the larger company that's asking you to fill that position?
Right, so our service is to provide that employment, and the bulk of what we're providing is our, like if you work with our W-2 employee to our client.
Right.
And so that would be our service, that tax, and the vast majority of that service is a wage and is payroll tax and benefits. So that's really what you're gonna be taxing when you tax the wages and payroll tax. All you're doing really is making jobs more costly and also sort of crowding out wage growth potential.
Got you. And so you mentioned how it's a double tax on wages. Could you go a little more in depth on how that works as far as the double tax on wages?
So if the server, so let's say you're paying $21 an hour in a wage plus benefits plus payroll tax on that, then that's about 80% of the costs that would be charged that would be subject to the tax. The rest of the cost would be the remaining piece, which is all our other costs, which would be IT and legal and all the other plus any margin. So we would be passing on that cost to the client, and then all those other features of what's built into the cost of the service, we would be paying to other people for those services. So you're really, and the hard part on the wage issue is the sort of white collar jobs and the higher end jobs don't have to be done in Maryland, as you've heard consistently. The things that are going to be most focused on is the location-based jobs. So that's going to be a lot of warehouse distribution, manufacturing, and healthcare, which can't be done other than that location. So it's going to really skew to be regressive.
So you raise a good point. So I could hire, for instance, there's a firm that I know in Virginia, it's like Apple One, which is based in Virginia. I could use that temp company and wouldn't have to pay the tax since they're outside of the state. Is that what you're saying?
It's unclear to us. It depends. I mean, I think that if you use them outside the state for tech services that are not location-based, then it's pretty clear that you wouldn't have to pay. If you use it on a location-based service, then you probably would have to pay, but it's a little bit unclear because I believe the law says that the sales tax is really levied where the benefits of the services are.
Got it. So where the company is receiving the services.
So for manufacturing facility or a warehouse that's here, it's pretty clear they would have to pay that services. But from a tech perspective, that company could contract with somebody in Richmond or anywhere else and avoid the tax.
Gotcha. Okay. Thank you. Thank you, Madam Chair.
Any other questions? Okay, seeing none, thank you all very much for being here.
Thank you.
Douglas Lindholm, Mel Stancliffe, Jonathan Rowland, Tom Ballantyne, Jeff Merritt, and Bill Chambers. Okay. Okay, and we will start to my far right.
Thank you, Madam Chair. My name is Douglas Lindholm. I'm the Special Counsel with COST, which is the Council on State Taxation. For 25 years, I served as the president of COST. I am a state tax attorney, and I have made this my life's work. I am here to oppose House Bill 1554. It is a unique tax. Contrary to Delegate Moon's assertions, there is no other state that targets business-to-business purchases in their sales tax. There may be some states that try to target services, but none that target services between businesses exclusively. And part of the reason for that is that this turns the sales tax on its head. The sales tax is a consumption tax. It's supposed to be levied on final consumption. We've heard a lot of testimony today about pyramiding. What happens when you impose it on business-to-business services is that it indeed gets passed on to customers, and each time it gets passed on, if that customer that it was passed on to is also selling those services, then the rate goes up. And what happens is you get a hidden tax. It's not transparent at all. We all need transparency in government. Let me conclude by listening to this testimony this afternoon. I listened to a great irony, and that is Maryland has a very educated workforce, but a lot of those, several of those are going to be losing their jobs. Maryland needs to build business infrastructure to make sure that they can seek employment here in Maryland without going elsewhere. This bill does not do that. I urge an unfavorable report. Thank you.
Good afternoon, Madam Chair, Madam Vice Chair, and members of the committee. My name is Jeff Merritt, and my wife and I own a small printing business in Wacomico County in Salisbury, Maryland. Not only would this bill affect our business, but it would affect a significant portion of our over 1,000 customers that we have in our database. I also serve on the board of directors of the Salisbury Chamber of Commerce, where we have 688 members. This bill would affect a large portion of those members as well. I did a couple scenarios. If we printed something for an accounting firm who uses a landscaping company who might be renovating their office for whatever reason, how many times is this tax going to be used? I think it's going to be a pile-on effect. We are located 7 miles from Delaware and 20 miles from Virginia, so I would question how many businesses might consider relocating, where we would not only lose this 2.5% tax, we would lose the property taxes involved, the payroll taxes involved. So I think this could actually cost Maryland money rather than make money. This House Bill 1554 is another tax on already struggling business community. It's anti-growth, anti-development for businesses, entrepreneurs, and investors, and I respectfully ask that you vote unfavorable on moving this forward. Thank you for your time today, and I appreciate the opportunity to speak.
Good afternoon, Madam Chair, esteemed members of the committee. I'm Bill Chambers, President and CEO of the Salisbury Area Chamber, and I also chair the Maryland Chamber of Commerce Federation of Chambers. The Salisbury Area Chamber, representing nearly 700 businesses across the Eastern Shore, many of those within minutes of Pennsylvania, Delaware, and Virginia, have grave concerns regarding House Bill 1554. If passed, and you've all heard this today, it will create serious economic challenges for Maryland businesses, most of whom are small businesses. This legislation is a direct assault on Maryland small businesses. House Bill 1554 would isolate Maryland from its neighboring states. While this new tax may provide short-term revenue boosts for the state, the long-term implications, as you've heard today, could overweigh and outnumber the immediate benefits. Mandating that Maryland businesses absorb this new tax on essential services they rely on adds significant financial pressures to business owners. We ask the committee submit an unfavorable report on House Bill 1554.
Hi, I'm Melanie Stancliffe. I'm president of M. Stancliffe Construction Company. I am MDOT certified woman-owned company. I don't do government work anymore because it's too much paperwork. Anyhow, I did a little research here because As a general contractor, I hire subcontractors. I broke down on $1 million job. My revenues run anywhere from $2 million to $5 million a year, depending on what the economy's doing. Anyhow, under those subcontractors, I broke it down with 3 subcontractors under my contract. The amount that they would be paying in this tax would be $18,500. On $1 million job, that's $25,000 alone by itself. If you add it all up together, that $1 million contract that starts out in the beginning ends up being $1,044,000. That's $44,000 added to a contract in this tax. I do grocery stores. 90% of my work is grocery stores. Where do you think that's going to go to? It's going to be passed down to your food. So I just hope you do not pass this board. My background before I did construction was the Board of Education. I worked for the Board of Education. I've heard you talk, and I'm going to make this brief, I've heard you talk about this bill going towards the Board of Education. I am a senior to most of the people in this room. I'm 75 years old. I have been through all of the increases and taxes that were set aside for the school system. They need to change the school system by taking the fluff out of it, go back to the real education, and teach our kids right. Thank you very much. I appreciate your listening to me, and I am impressed by the time you have spent in here. Thank you.
Madam Chair, members of the committee, for the record, my name is John Fiastro. I'm here on behalf of the Cybersecurity Association. My colleague Tasha Cornish spoke earlier, so I'm not going to repeat what she said. 600 members the Cybersecurity Association has, from Fortune 500 down to sole proprietors. Some of these members remember the 2007 computer services tax that was passed during the special session, and this General Assembly came back within a few months and repealed that tax. The tax before you today contemplates similar services being taxed. Our members opposed those taxes then, and they oppose this bill before you today for the same reason. Many members would like to grow here. You've heard that this tax bill can stifle growth and has our members turning their eyes to grow in other states. Many of our members serve as subcontractors on contracts, and they serve on multi-year contracts where their pricing is fixed. They did not calculate the taxes contemplated under HB 1554 in their original pricing. So for every $1 million of services, they'll be having to fork over 2.5%, $25,000 back to the state. For some of our members, they operate on fine margins like that, and that could eliminate their entire profit. So there will be a detrimental impact on our membership. We ask this committee to reject HB 1554. Thank you.
Thank you. Any questions for the committee? Okay, thank you for being here. Gentleman from Salisbury, safe travels. Okay, Bryce Phillips, Rebecca Schneider, Christopher Stone, Michelle Joseph, okay, we'll start with you, sir.
Good afternoon. My name is Bryce Phillips, and I'm one of the family owners of Phillips Foods and Seafood Restaurants, a fourth-generation family business that started in Fishing Creek, Maryland in 1914. We've called Maryland home for over 110 years, and I fully expect to remain here forever. I'm a local resident of Riva, Maryland, and my business headquarters is in Halethorpe, right south of Baltimore. We employ almost exclusively Maryland residents with a few remote salespeople and southern Pennsylvania residents. Many of these people have been with my family for well over 30 years, with a handful over 40. They call Phillips home, and we refer to ourselves as the Phillips family. I grew up working in our restaurants, raised and taught by many of these long-term employees. Many were simply hourly employees when I was much younger, and now they're in executive management roles throughout the company. We promote from within. I'm here today to state my opposition to HB 1554. In an environment of high inflation, high costs of borrowing, and the seemingly ever-present threat of tariffs, any additional costs imposed upon my company will further erode my ability to hire and train new team members, give raises and bonuses, or most destructive of all, force me into a situation where I have to issue price increases to my customers on top of the high prices they're already paying. Food inflation is a major issue for Maryland residents, especially those of lower income, and will no doubt increase even further if I have to cover additional costs. We've calculated the effect of the bill on our business. It's about $30,000 per year. Most of that is in data IT services and advertising and marketing. The only way to avoid this is to reduce my spending on these critical support services. So I sincerely urge you to oppose this bill. Thank you for your time.
Good afternoon, Madam Chair and members of the committee. My name is Chris Stone. I'm representing Emoxie Data Solutions as one of its co-founders and also as the board chair for the Harford County Chamber of Commerce. I'm a constituent of Delegate Griffith in 35A as well. Emoxie is a small website development and technology company. This is our 20th year in business, and we've been in Maryland since the beginning, and I really don't want that to change. The proposed bill would cause about $18,000 of extra expense for us through direct cost or cost increases we would expect to receive from other B2B services that we utilize. The tax increase would result in price increases to our customers, pull back from local spending and community support while creating uneven footing with our competitors in surrounding areas. Our competitors do not operate with a 2.5% penalty. That's just my business, though. Speaking on behalf of the almost 650 chamber members that I represent, they would be affected in much of the same way. This tax would result in around $15 million being removed from our local economy on a yearly basis. This would also affect community sponsorships, local spending, and employment in the area. It will have a very large and adverse effect. I'm obviously deeply opposed to House Bill 1554. The answer simply cannot be more taxes. It is very anti-business, and I would prefer to see restrictions removed and the tax base increased instead. Thank you for your time.
Good afternoon, members of the committee, Chair. My name is Rebecca Snyder. I'm the Executive Director of the Maryland, Delaware, DC Press Association. And I wanted to highlight something that Mr. Phillips said earlier. When he was talking about the effects on his family-owned business, he said specifically, I will reduce advertising. And I want to just follow that through, because that's the main focus of the Press Association's concern. Our members rely on advertising, and the advertisers that utilize our businesses rely on advertising too. They rely on businesses to, they rely on advertising to get new clients, get new consumers to their worlds. And when you tax advertising, those services don't expand. You know, no one says, oh, I'm going to expand my budget for advertising. They actually contract it. And so what you're doing is harming the ability of businesses to actually go out and make more money to even pay these taxes. It's confusing as well in terms of advertising on what stage, you know, is it website development plus the ad itself, plus marketing services and development? You're taxing the same thing over and over and over again. And this advertising is a critical need for your news media to stay in business. Please do not tax advertising, advertising services, and printing. We urge an unfavorable report. Thank you.
Good evening, Chairperson, and also Vice Chairperson, delegates, and fellow business owners behind me that are remaining. Thank you. My name is Michelle Joseph, and I am a proud resident of Montgomery County, Maryland for over 50 years. And I'm the owner of 2 small businesses in the county. One of our businesses is an incubator business with Bethesda Green entitled Next Generation, Inc. Our business is a training company offering recruitment, mentoring, and clean energy construction companies. Today, I'm respectfully testifying against HB 1554. You see, in 2022, I was diagnosed with an aggressive form of breast cancer. Between my radiation and second round of chemotherapy, I started a training business which offers recruitment and mentoring for clean energy and construction industries here in Maryland, my home. Our role is to ensure that there are qualified candidates ready to fill the jobs that many are aging out of today and definitely tomorrow. We are one of several businesses affiliated with Bethesda Green and a business dedicated to promoting sustainability and green economy through innovation and community engagement and supporting businesses focused on sustainability. HB 1554 will not only hurt my business, but also those that we're trying to get business and offer jobs for in the federal government. And we are unfortunately in a position that we will be so hurt that we'll be crippled. As a small incubator business just starting out, focused in sustainability, trying to get jobs for federal workers, this will cripple us. So we are unfavorably suggesting that you not support HB 1554. Thank you.
Good evening, Madam Chair, members of the committee. My name is Tom Ballantyne with NAIOP Maryland. We're a commercial real estate trade association here respectfully in opposition. Despite efforts to avoid pyramiding, the bill would still inflate building costs by taxing traffic engineering, environmental protection and remediation services that are engaged at the earliest stages of commercial and residential construction. The tax on facility operations, maintenance and repair embeds the sales tax in the overhead of tenants of commercial buildings, which necessarily will increase consumer prices. The proposed rate is 2.5%, but the revenue requirement means taxing $40 to $50 billion of business activities every year. By 2027, the sales taxes increase 22% compared to 2024. Commercial real estate does pay transfer, recordation, property taxes. This committee recently reported House Bill 23, which authorizes the counties in Baltimore City to set higher commercial and industrial property tax rates for some of the same purposes that this bill would dedicate funds towards. These policies undermine the value proposition for businesses to locate and remain in Maryland. And it comes at a time when commercial real estate, especially in certain submarkets, is struggling with historically high vacancies, high interest rates, and billions of dollars in building energy performance compliance costs. So for these reasons, we recommend your unfavorable report.
Are there any questions from the committee? Okay, thank you all very much for being here.
Thank you.
Thank you.
Michael Patty, Jake Whitaker, Sharon Sykes, Hugo Cantu, Terrace King, Matthew Putnam. That's all I have. So if you have signed up to testify and I did not call you, I thought you were signing somebody else up. Eddie, come up. I thought your name was like, your name wasn't as testifying. Is there anybody else here who, okay, after this, you can come up, okay? I'll start with you. Yeah.
Great. Thank you, Madam Chair, members of the committee. My name is Jake Whitaker, and on behalf of Maryland's hospitals and health systems, we're in respectful opposition to this legislation. And although Maryland's hospitals are nonprofit organizations and they're generally exempt from the sales and use taxes, we do have some concerns about the way this bill is drafted. The bill mandates that business entities are subject to this tax, but business entities aren't defined in the Maryland tax code. Additionally, similar bills like the one last year explicitly specified which services were exempt from this tax. And the reason why we're being so cautious, even though we're potentially exempt, is that Maryland's under a unique kind of all-payer model, which means that Maryland hospitals get set budgets for any given rate year, meaning that the fixed budget means that they can't just raise revenue for additional services. So what that really means is that when a hospital incurs unexpected costs, they have less resources to provide care for patients in Maryland. So if hospitals are subject to this bill, that means there's going to be less money to go to patients in Maryland. And so for the aforementioned reasons, we respectfully request an unfavorable report. Thank you.
Good evening, Madam Chair, Madam Vice Chair, and members of the committee. My name is Hugo Cantu, representing the Apartments and Office Building Association. asking for an unfavorable report on 1554. For context, AOBA members rely heavily on the contracted businesses. We've heard that earlier today. The tax burden comes at a particularly challenging time, especially for properties in Montgomery and Prince George's County. These multi-family property owners are already facing significant operating cost increases and regulatory mandates with revenue restrictions. Obviously, the bill proposes a 2.5 tax on B2B services. That's ultimately going to include the services that these multifamily and commercial properties have to go after. And in like IT, we're talking accounting, we're talking payroll, legal, everything that we've heard from earlier today. Those are the reasons we're asking for rejection of this bill. The proposal is obviously going to have detrimental effect on rental housing providers, commercial real estate. It's going to directly increase operating costs as all the other regulatory mandates have the last couple of years. That's going to trickle down to increasing rents on commercial and residential. AO was asking for an unfavorable report, and we're kind of wondering why Maryland, we should be fostering economic growth, not putting on additional financial burdens. Thank you.
Thank you, Madam Chairwoman, delegates of the committee. Thank you for the opportunity to speak today on HB 1554. My name is Matthew Putnam. I'm the director of the Better States Budget Project for the National Taxpayers Union Foundation. For nearly 50 years, NTUF has worked with policymakers across the country and in Washington to craft good tax policy. Unfortunately, HB 1554 violates core principles of good tax policy by imposing a hidden tax increase on Maryland consumers. One of these principles is that sales taxes should apply only to the final sale, not to intermediate business-to-business sales. Applying a sales tax to business services is what is known as tax pyramiding, as other delegates have referenced. This means that the end consumer ends up paying sales taxes on the value of sales taxes applied earlier in the supply chain. In effect, it is taxing taxes. Delegate Moon mentioned that some other states have similar tax situations, but most of those are actually incidental rather than intentional, as with this bill. And many of those states are actually trying to roll back those taxes rather than apply them. At a time when average Maryland families continue to struggle with inflation and are bracing for tariffs, the last thing they need is another increase to their cost of living. And make no mistake, no matter who the tax is technically assessed on, it will be average Marylanders who pay. Maryland, and more literally Maryland taxpayers, can't afford yet another tax. Concealing the policy by assessing the tax earlier in the supply chain will do nothing to protect Marylanders from feeling the pain of these costs. NTUF opposes this bill. Thank you.
Thank you, Chairwoman Atterbury and members of the committee. My name is Sharon Sykes, and on behalf of the American Hotel and Lodging Association, which represents every segment of the hotel industry, we ask that you oppose HB 1554. This increased expense to operate would lessen our industry's competitiveness and threaten economic growth of Maryland's lodging industry. Costs are rising faster than revenues, making growth investment and job creation tougher in Maryland. Small business owners have been struggling as rising costs compounded by high inflation and interest rates make it difficult to stay open and serve guests. Everything from operations and maintenance to sales, marketing, and IT rose nearly 5% in 2024. Virginia and Delaware do not impose similar taxes on business services, creating an immediate disadvantage for Maryland hoteliers. Meeting planners will look at the bottom line and take their business to a neighboring state. Leisure travelers will go elsewhere for their family vacation. Government travel provides a lot of business to Maryland hotels. Government employees will feel the pressure to book elsewhere if Maryland hotels cost more than options in a nearby state. For these reasons, we urge an unfavorable report on HB 1554. Thank you.
Good evening, Madam Chair, Madam Vice Chair, and committee members. For the record, my name is Eddie Pounds, and today I'm here in my capacity as president of the board for the Maryland Government Relations Association. You've been taking a lot of arrows today, all of you, and I just want to come off script for a little bit and thank you for all the work that you're doing, because I know you're scrambling to find new ways to generate new revenue. It's tough. But I'm here today in respectful opposition to House Bill 1554, Just so you know, a lot of you may not know what MGRA is. We're a nonprofit organization whose aim really is to educate and promote the art and science of lobbying. And so I represent all of the lobbyists, all the registered lobbyists in the state of Maryland. You have our written testimony before you, which articulates how this measure, if it's passed, would impact our industry. Both the MGRA board and our general membership have expressed a lot of different opinions about the impact of this B2B service tax. But to me, it has become quite apparent, I think you're hearing it today as well, that the reoccurring concern is there's really no such thing as a B2B tax because there's always a C to consider, whether it's the customer, the client, or the consumer, and in some instances, and you've heard this today, the constituents who will be the most impacted by this bill. While we certainly appreciate the fact that you all are trying your very best to find new revenue, we ask for an unfavorable report. Thank you.
Thank you. Any questions? Okay, seeing none, thank you all very much. So, if I haven't called you, come forward. Oh, okay. Go ahead.
Thank you, Madam Chair. Michael Patty here today on behalf of the independent pharmacies in Maryland. These are your local community pharmacies across the state in respectful opposition to House Bill 1554. Healthcare is very unique. You know, when there's new taxes levied on these businesses, they can't pass that cost on to the customer. For those of you that aren't familiar with how a pharmacy gets reimbursed, they're in a very heavily one-sided arrangement with what's called a pharmacy benefit manager. That pharmacy dispenses a drug to your constituents. They get reimbursed by what we call a PBM. Some drugs are dispensed at a loss. Some drugs are only reimbursed from a dispensing fee of 60 cents per dispensing. So any new costs for these already struggling businesses will just be hard to absorb. I know it's late, so I'll just ask that, I'll just restate that we're in opposition to this bill, and thank you.
Good evening, Madam Chair, Madam Vice Chair, members of the committee. My name is Chad Smith, born and raised in Hagerstown, Maryland, and currently residing in Frederick, Maryland. How are you? I'm the owner and founder of Five Lions Digital Marketing in Frederick, Maryland, and this feels a lot like robbing Peter to pay Paul. And in marketing terms, it's not a good look in my view. In a time where a lot of my clients and a lot of the businesses that I work with in my capacity as a member of the Western Maryland Advisory Committee with the Maryland Black Chamber, when you're in startup mode, you can't afford extras. And this business-to-business tax is just one more thing that may be the tipping point in deciding whether someone works with me in Maryland or one of my competitors in Delaware or in Virginia or in DC. So I would just urge you to really explore other ways outside of what I consider to be, and I'm not an expert, to be the easy path and just add more taxes and find more creative ways to create more revenue to lessen the burden of the small businesses that you're trying to grow here in the state. I think we can make the state strong, a business hub for the country, and thank you for your time and consideration.
Okay, any questions? Okay, I think we're going to give the two of you an applause because you were the last two in person. Thank you. We do have some virtual, so you are excused.
Thank you.
Thank you. Folks, I believe we have 9 of 26 virtual witnesses, so we'll just start bringing them in. Okay, and Steve McCoy. Okay, folks, if you are if you are virtual, okay, please turn off the live stream feed. Yep, perfect. Okay, Steve McCoy, go ahead, please, for a minute 30.
Thank you. My name's Steve McCoy. I'm the Senior Vice President at Patient First.
Patient First offers primary and urgent care services to patients at 24 locations in Maryland. In 2004, we treated patients during more than 1 million visits in the state, with 25% of those coming from Medicaid patients. Patient First is organized as a group of affiliated entities in which one entity employs medical professionals to deliver healthcare services, and an affiliate provides business services in support of that healthcare delivery. These related entities do business as Patient First, and neither offers business services to third parties. This is not an unusual structure in healthcare where corporate practice of medicine rules limit a corporation's ability to employ physicians and other healthcare providers. This bill will make these intra-company services taxable when they would not be if they were provided within a single corporation. We are requesting an amendment to exempt intra-company services, defined as services provided between business entities that are consolidated into a parent entity under generally accepted accounting principles or GAAP, and file and pay taxes through that parent entity. Intercompany sales exemptions are recognized elsewhere in Maryland law. For example, companies engaged in intercompany sales of prescription drugs are not required to register as a pharmacy or wholesale distributor. If Patient First intercompany services become taxable, we will have no choice but to reassess our current development plans and potentially prioritize development in other states. Thank you for your time.
Okay, thank you. Are there any questions for Mr. McCoy? Okay, thank you, Mr. McCoy, for being here. Have a good night. Kathy Hornig, please, for 1:30.
Good afternoon. My name is Kathy Hornig. I'm a lifelong Maryland resident and proud Baltimore girl. I own a small Baltimore-based event planning business called 5 Star Festivals. HB 1554 will place a hardship on my business and the many all-Maryland businesses, artists, creatives, entrepreneurs with whom I contract to produce special events. The large-scale festivals that I plan not only uplift our state in joy and celebration, which we can use now more than ever, but they are proven economic development tools that generate tourism, heads on beds, marketing opportunities, and significant revenue and taxes for Baltimore City, County, and beyond. Please consider the broader and longer-term effects that HB 1554 could have on the events industry and others, and vote a negative report on the bill. Thank you.
Okay, thank you. Are there any questions for Ms. Hornig? Okay, thank you, Ms. Hornig. Have a good evening.
You too.
Jill Hudson, please, for 1:30.
Hi, I'm Jill Hudson. I am in Washington County, Maryland, in the Hagerstown area. I own the Market Hub, which is basically a store for over 100 small businesses in our area. We at the Market Hub do exist along the 8-mile strip between Pennsylvania and West Virginia. And so we are constantly in competition with the other states. We do ask that you would oppose the HB 1554 and that you would truly understand that the small businesses can't take on anymore. When you increase the minimum wage, it literally caused some havoc to some of our small businesses. We lost small businesses because of it. They couldn't afford keeping their employees and therefore shut their doors. Since we are in so close proximity to everyone else, or the other states, we do ask you to please help us. Do not accept HB 1554. Thank you very much.
Thank you. Are there any questions for Ms. Hudson? Okay, seeing none, thank you very much. Have a good evening.
Thank you.
Thank you. Mr. Trello, please, for 1:30.
Hello. Greetings, members of the committee. Thank you for the time today to speak to you about House Bill 1554. I'm a longtime Maryland business owner in the technology sector. I recognize Maryland is facing significant budget challenges, and I appreciate the difficult task you have before you in trying to find the best path forward. Governor Moore and other policy leaders' public position that overall economic vitality and sustained economic growth are crucial to Maryland's future aligns with business and community leaders in the understanding that Maryland's future depends on a prosperous private sector. This bill, with its increased taxation, makes Maryland more uncompetitive and overall too expensive of a place to do business. Consumers will ultimately pay this tax. There are many reasons why this legislation would harm Marylanders, many of which have been talked about today already. I would like to bring to the committee's attention an important aspect of the bill that has been mostly overlooked. The world is in the beginning stage of a great digital transformation, where, to put it simply, all businesses will, to varying degrees, become technology businesses. As this process continues and accelerates, the nature of how businesses operate will change, and there will be a massive increase in our reliance on technology. The results of this transformation are impossible to predict with accuracy, but it is certain that it is underway, and it represents a great opportunity for those ready for it. Maryland needs to be in a position to take advantage of this, and my fear is that this bill will prevent businesses from staying here and, more importantly, forming here.
Thank you. Are there any questions for Mr. Trella? Okay, seeing none, please have a good evening, Mr. Trella.
Thank you.
Okay, the screen says Casey Aiken, but I believe you are Paul Aiken, perhaps?
I've got many aliases, Madam Chairman.
Okay, well, which one is here today?
Well, Paul Case Aiken is here today.
Okay, go ahead, sir.
Thank you, Madam Chairman. And as I mentioned, my name is Paul Case Aiken. I'm a member. I live in District 16 in Montgomery County, and I'm here today on behalf of the Maryland Land Title Association. We appreciate the opportunity to provide testimony in opposition to HB 1554. Delegate Moon, in his opening remarks, stated that title attorneys came out of the bill. However, a typical real estate closing involves numerous service providers, including abstractors, surveyors, home inspectors, processors, et cetera. These services would be subject to the new tax, since these services are provided by small incorporated businesses, which will ultimately be passed along to the consumer. We also heard earlier today about the relationship with service taxes in surrounding jurisdiction. I will point out that real estate transactions are increasingly being conducted online with digital land records, cloud-based settlement software, and remote online notarization. Settlement services can be outsourced to other states, where the entire settlement process can be performed out of the state of Maryland. Third, the bill does not clearly exempt title insurance from this expanded taxation. If this results in a double taxation scenario, since title insurance policies are already subject to a premium tax, title insurers may be forced to increase premiums, again adding to the cost of home ownership. And lastly, we will relate back to our first point. We are concerned about the ambiguity in the legislation regarding the term business entity. This term is not defined in the statute, leaving significant uncertainty about which entities will be subject for the tax. Thank you so much for your time.
Thank you. Are there any questions from the committee? Okay, Mr. Aiken, you're off to spend the evening under whichever alias you would like.
Well, thank you. I won't tell you what my wife calls me.
Oh, spicy. Okay. All right, Ms. Blanding, please, for 1:30.
Thank you. Good afternoon, Madam Chair and members of the committee. My name is Yvonette Blanding. I am a CPA. I am a Baltimore resident, and I am a member of the Maryland Association of CPAs. I'm currently the Director of Accounting for Maritime Applied Physics Corporation, located in Baltimore. MAPC is an engineering and manufacturing company focused on the development of advanced technology products for the defense and commercial spaces. We produce a broad spectrum of products ranging from crewed to uncrewed boats, undersea to surface vessels, and aircraft to land vehicles. I would like to share from my perspective as Director of Accounting the impact of sales tax on business-to-business services will have on local businesses like MAPC. This bill will add 2.5% cost to many of the services we purchase that are critical to our ability to operate as a business in Maryland, such as tax, accounting, and auditing. When business-to-business services are taxed, it becomes a tax on production, and these taxes impede overall economic development of our business and put us at a competitive disadvantage, especially with similar businesses that operate in a state without such taxes. This is the primary reason that I believe a sales tax should not be levied on business-to-business services in Maryland. And it is for these reasons that I stand with the Maryland Association of CPAs and respectfully request an unfavorable report for HB 1554. Thank you.
Thank you. Are there any questions for Ms. Blanding? Okay, seeing none, please have a good evening. Thank you.
Thank you. You do the same.
Next, Megan Stokes, please, for a minute 30.
I love having it. I always forget how to unmute. Thank you for the opportunity to speak today. I'm Megan Stokes. I serve as the State Policy Director for the Computer and Communications Industry Association. We're a not-for-profit tech trade association. I'm here to express my strong opposition to House Bill 1554. We understand that Maryland faces significant budget challenges, and there are many hard decisions that you are currently making. But implementing a B2B service tax would create significant long-term problems for Maryland's economy and competitiveness. I won't belabor the points you've heard already. There'll be a disproportionate impact on small businesses, competitive disadvantage for those in the region, and the fact that this would create sort of a layering, cascading tax effect. But I do want to mention, as a Maryland resident since I was 5 years old, and someone who many years ago, so long ago that the General Assembly had an indoor smoking room, I was an intern for the House Judiciary Committee. I know that every senator and delegate in the General Assembly has their hearts in the right place, and they are racking their brains to find ways to close the deficit. I appreciate the work that you are doing and that we will continue to do for our state. We just need policies that encourage business growth and economic expansion. A thriving business community naturally will generate increased tax revenue through job creation and economic activity. We appreciate the committee's consideration of these comments and request an unfavorable report. Thank you.
Okay, Ms. Stokes, there is a question for you. Delegate Wims.
Thank you, Madam Chair. Just a quick 2 questions. First, how many businesses do you represent and where are you headquartered? What city or town?
Sure. So we're actually headquartered in DC for our trade association, and then we represent about 20 to 25 members. Some of them are more EU focused, others are in the States.
Okay, thank you very much. Thank you, Madam Chair.
Okay, that's it. Thank you, Ms. Stokes, for being here. Have a good evening.
Thank you.
Okay, next, Reed Foble, please, for a minute 30.
Thank you, Madam Chair and members of the committee for the opportunity to testify today. I am here in respectful opposition of House Bill 1554 and ask for your support to clarify that professional employer organizations are not solely payroll service providers and should be excluded from the proposed sales tax. My name is Reed Foble, and I'm a Director of State Government Affairs at the National Association of Professional Employer Organizations, known as NAPIO. We are the national trade association that represents the PEO industry. By way of background, PEOs provide human resource services to small and mid-sized businesses, paying wages and taxes under the PEO's EIN, offering workers' compensation and risk management service, and providing compliance assistance. PEOs have been operating in Maryland for decades, with a couple hundred businesses partnering with PEOs. We believe it is necessary to include amending language clarifying that the sales tax being considered would not apply to PEOs, as PEOs are co-employers with their Maryland small business clients as defined under Maryland law, and they are not merely a payroll service provider. If PEOs are included in this sales tax, it would not only negatively impact PEO operations, but more importantly, as you've heard today, the small businesses they partner with, stifling economic growth, hurting the employees of these businesses, and creating a regional disadvantage. Thank you for the opportunity to testify, seeking clarification of House Bill 1554. Thank you.
Thank you. Are there any questions from the committee? Okay, seeing none, thank you very much. Have a good evening. Next, Julia Howes, please, for a minute 30.
Hi, members of the committee. Julia Howes, President and CEO of the Southern Anne Arundel Chamber of Commerce. We are against the proposed 2.5% tax on essential business services, HB 1554. This tax will increase costs for so many basic business-to-business services, making it harder for businesses to thrive. An average business spending $200,000 annually on services would spend $5,000 on new taxes, which could be detrimental to a small business, limiting their profit margin. They will be struggling to keep their businesses open, all while increasing their administrative burden to manage the additional taxes. Today, 2.5% could expand to more industries and higher rates. This sets a precedent that we do not need in Maryland. This bill directly prohibits the growth of business. The money paid into this tax doesn't benefit the business directly. It limits the expansion and innovation of the business. Governor Wes Moore had directly quoted, "You cannot tax your way to prosperity. You must grow the economy. With additional taxes, we cannot grow our economy and we cannot grow our businesses." The comptroller's office stated that they need 3 new employees plus $250,000 for computer programming, but they also said that they were ready and willing to enact this. Those two don't go together. This bill proposes new taxes and causes undue burdens, including revenue loss and potential employment cuts, while promoting growth and hiring at the state government level. Again, they don't match. We're 46th business in the country while our neighboring states are higher on the list. How do we see economic growth while continuing to drop lower and lower on the list? Please vote no to HB 1554 and protect our small businesses in Maryland. Thank you.
Thank you. Are there any questions for Ms. Hodes? Okay, thank you very much for being here. Have a good evening. And to round us out for the evening, Nick Sharps from Garrett County. You're getting a round of applause here from the entire committee.
Thank you, thank you.
You know what? We're not even going to put the timer on, but we know you're going to stick to the minute 30.
I sure am. Good afternoon. Thank you for this opportunity, esteemed committee members, and greetings from the westernmost reaches of Maryland. My name is Nick Sharps. I'm the interim president for the Garrett County Chamber of Commerce, and I am testifying today on behalf of our 540 members in opposition of House Bill 1554. Our membership accounts for half of all businesses operating in Garrett County and serves as a reasonable sampling of the industries that can be found here. At minimum, 39% of our businesses qualify as services to be taxed under the proposed legislation, and the rest of our members rely on those same critical services. I realize that a 2.5% tax might seem minor to some, given our current fiscal situation in Maryland, but for many of our businesses scraping by on 3% and 4% margins, any additional burden can be the difference between life and death. Small businesses are the foundation of Maryland's economy, and with the exception of around 17 larger firms, that's all we have here in Garrett County. With such thin margins, many will be unable to absorb the cost of this new tax without, scaling back their staff, sidelining plans to expand, raising prices on an already weary consumer base, or even relocating. As you've heard numerous times today, Maryland is already ranked as the 3rd most expensive state to do business in. We desperately need to change that perception that Maryland is not a business-friendly state so that we can attract more investment and expand our tax base. For these reasons, we respectfully urge the committee to issue an unfavorable report for House Bill 1554, and you have my sincere thanks for this opportunity to speak. Thank you.
Okay, are there any questions for Mr. Sharps? Okay, seeing none, thank you very much for being here. Have a good evening. And committee, that ends the bill hearings for House Bill 1554, and that concludes our bill hearings for today. We do not have any hearings tomorrow, but we will be voting, so please stay tuned for the time. And do subcommittee announcements yet? Delegate Plakovich-Carr.
Thank you, Madam Chair. Early Childhood will be meeting at 9:30 tomorrow morning virtually.
Delegate Ebersol?
I think 12:30 or directly after Racing and Gaming. Is that right?
That's correct. Racing and Gaming, 12 noon tomorrow.
Ed sub at 12:30. I didn't say what committee it was.
Okay.
Yeah, revenues is after floor.
Okay, let's try this again.
All at the same time.
Yeah, okay. Who goes first?
I'm still on.
Who goes first? Yeah.
Yeah, we're 9:30.
Early education.
News immediately following floor.
Racing and gaming at noon or thereabouts. Right.
And bringing up the caboose, Ed Sub. I mean, we have 12:30 on the schedule right now. We'll see if that works.
So we're likely to vote around 2:30, so.